case in the middle, in the last 60 days of an election. Andrew, it's not going to happen.
Okay, but flip it around. Is there an argument to be made that if, in fact, the Supreme Court says the case can't go forward, that actually that brings out Democrats, for example, or Republicans who've been anti-Trump, or say to themselves, you know, that they feel like the system is now rigged on the other side? That's why I feel like the case, we're not talking about the case at all. You're saying the case is irrelevant, or you think the case is very relevant?
Andrew, everyone is voting. Every human being is going to line up. They're going to vote early. They're going to vote often. Every state, every human being.
They're going to vote often.
Let me ask you this then. Let me ask you, hold on.
Yes, particularly Chicago.
But if you're right about that, what happened in South Carolina, or I'm sorry, what happened in Michigan, this idea that they were going to repudiate Biden, right? That there was this group of people who on the left who are unhappy with Biden. Do you actually think that those people, if you said everybody's really going to vote, do you think that actually those people don't go to the polls?
No, in the end.
And in the end, they do go to the polls. And in the end, do they say to themselves, actually, you know what, I'm going to vote for Trump? Those people, those people who voted in Michigan to say, hey, Biden, we don't like what you're doing in terms of policy in the Middle East and Israel. You think those people ultimately vote for Trump?
No, I think those people ultimately vote for Biden.
So I don't even know what we're talking about when we look at that group and say that there's...
I was going to ask that question, too. I don't think they matter. I think Haley voters will vote for Trump. So
I agree with that, but you got these shifting because Trump is losing suburban voters at an even greater pace than he did in
hogwash.
2020. Suburban women, 18 to 45.
So who's he picking up to be 5 points up then?
If everybody's voting,
the people
Hispanics and Latinos.
Right.
Not losing younger voters as much as he has. Union voters, which is why Pennsylvania, Michigan, Wisconsin, state after state of these 9 key swing states, Trump is winning in 8 out of 9. Arizona,
even
Nevada,
after Biden
Georgia.
walked the picket line?
It had no impact in the end. And I just think we need to focus on the tone and the content that's going to go back and forth. Because in the end, we're going to be down to 1 or 2% in these 9 states. We're going to have the most negative, hostile election in modern history. We don't know if Biden's going to debate Donald Trump. That's something you should start to focus on. And we're going to have this clash.
But you think it's going to happen? See,
you think there is going to be a debate?
I'm still not convinced it's those two candidates.
I don't believe Joe Biden.
99% those two candidates?
If you wanted me to bet on it, I think it's legal now. You'd have to give me 9 to 1 odds for me to bet that it's not one of those.
Either one.
Either one. Let's make a bet.
No, it's a black swan, but I wonder if we're just underestimating the possibility that neither one of them finally.
If either of them steps aside, it creates chaos in that party. But here's the thing. If either of them steps aside, that's the party that wins the election.
That's what I mean.
Yes, you're correct. That's the party that wins.
Well, then I'd step aside. Right?
But Joe Biden's not going to step aside, and Donald Trump's not going to step aside. So it's a conversation that isn't actually real.
Okay. Frank Hans.
Thank you.
Thanks.
All right, coming up, a special report from Phil LeBeau on Chinese electric vehicles. And later, a new survey on the rise of anti-Semitism in America. We'll speak with Jonathan Greenblatt from the ADL in the next hour. Squawk Box will be right back. Chinese brand vehicles are seeing stronger demand around the world. Our Philip O has more on China's auto revolution from one country buying in, Chile.
Buenos dias, Becky, here in Santiago, Chile, where Chinese autos are not hard to find. In fact, this is one of the primary markets separate from the major markets where you have seen a boom in the sales of Chinese-built vehicles that have been exported and sold in this country. How many vehicles are exported from China? Look at this chart. They are now #1 in the world, a 62% increase in auto exports last year. And let's be clear here. The vast majority of the vehicles being exported are gasoline-powered internal combustion engine vehicles. Just 29% are electric vehicles. So we wanted to find out, what's the appeal? Are people embracing Chinese vehicles? Clearly they are, because sales are going so strong. We went to an auto mall, literally a mall that has all of the major automakers, including automakers from the United States, like Ford, like General Motors. And we asked people, look, what's making this so attractive to you that you want to buy an auto here in Chile that was built in China? And one of the dealers told us something very interesting. He said, there is an ability for the people here to get past the idea of a car being built in China. That hesitancy has faded away.
They know, they understand that for them it's also a challenge to enter, because they have a lot of prejudice in terms of the perception that the Chinese has in US. But it's a matter of time, because the quality that they have, the pricing that they have, it's going to start convincing a lot of people.
So what are the primary markets where the Chinese are exporting their vehicles? First is Russia. Once the Europeans pulled out following the war in Ukraine, then China stepped in, supplying the vast majority of the new vehicles that are sold in Russia. But Mexico is a close #2. In fact, in Mexico, Chinese-built vehicles are now 10% of the market. And when you talk with the experts, they all say the same thing. It's only a matter of time until they actually build in Mexico and start exporting to the United States.
Elon Musk is absolutely right, and he knows just how cost competitive the Chinese can be. Tesla makes half of their vehicles in China as we speak. So he knows the Chinese cost basis, and he understands that without tariffs, the Chinese will, yes, demolish competition globally. Many of today's existing automakers won't be with us in 5 years if the Chinese are allowed to pour in without tariffs.
Michael Dunn spends a lot of time in China working with the Chinese automakers. He was referencing Elon Musk's warning from the last earnings call at Tesla, where he said, something's not done about trade policy. The Chinese automakers will demolish established automakers around the world as they continue to export. Take a look at shares of Tesla, BYD, and XPeng. Pretty much all trading in tandem. You see XPeng finally coming off of the inflated prices that they were enjoying, 6 months to 9 months ago. Guys, the bottom line is this. What we're seeing here in Chile, we're seeing in other countries, in Australia, in Israel. You go around the world, if there is not a manufacturer in that country, and even if there is a manufacturer in that country, the wave of exported vehicles from China quickly resonates with buyers, in part because of the cost, and they're better made now. They're more reliable than they used to be, and that's the reason why they are so successful in countries like Chile.
So for the U.S. automakers, can they compete, or will they look to Washington for higher tariffs and try to make sure?
They're going to look to Washington. There's already a 25% tariff for anything that is built in China, a vehicle, and then exported to the United States, regardless of who it is, whether it's a Chinese automaker or General Motors or Tesla. That's why Tesla builds in China but exports to other markets. They don't export from China into the United States anymore. They did initially, but they don't do that right now. And so what you're seeing, Becky, is that for the U.S. automakers, they will increasingly turn to Washington and say, look, if you don't do something in terms of trade policy, when the Chinese automakers are building in Mexico, which is the plan within the next 5, 6, 7 years, then something's going to happen to the U.S. market where the Chinese come in, they will undercut on price, and they will start gaining market share.
Phil, that's amazing.
That's the concern for U.S. automakers.
This whole report's amazing. I don't even know if I've seen a Chinese car, so it's amazing. But I have just a real quick question for you. Is there Does that car go 0 to 60 in 1 second? The Roadster we've been waiting for forever, and is that safe? I mean, can you see? I mean,
Are you talking about Tesla's Roadster, the one they're working
Yeah.
on?
Elon said it goes 0 to 60 in 1 second. I don't want
Right.
that. That scares me. And it seems like you'd fishtail, or and you get, you come up on things so quickly. You don't know whether that's a truth. Is that hyperbole from Elon, or is it true?
I think it's hyperbole.
Okay.
And I don't look. Is it possible? I don't know the exact. I mean, they did go zero. They've cracked the 3-second barrier. That has happened.
Three is
they're,
not
they're
one.
keep pushing the time down. Yeah. So what you see is increasingly they will be able to go 0 to 60 faster and faster and faster. Joe, the
Why?
Roadster is a niche vehicle. It's a niche vehicle. But there are people who want that Roadster. They look to the original Roadster and they say,
Okay.
bring us back the Roadster. And that's what he's working
All right.
on.
Phil, thank you.
Okay, coming up on the other side of this, the Biden administration looking into whether Chinese components in, quote, connected vehicles pose a security threat to Americans. A live shot of the White House at 6:30 this morning. We're coming right back talking.
Good morning, everybody, and welcome back to Squawk Box. We're live from the NASDAQ market site in Times Square. The futures this morning are under a little pressure after the major averages closed lower yesterday. Dow futures right now off by about 130. S&P futures down by 11. The NASDAQ indicated down by 33.
And new this morning, the Commerce Department will be investigating national security risks from connected autos that have parts from China and other countries of concern. The department now worried about the personal data risk if your phone connects to your car, as well as the risk that the vehicle could be remotely disabled by bad actors. The department wants to take the action now before Chinese manufactured vehicles become widespread in the U.S. Joining us right now to talk about this and so much more, former U.S. Trade Representative Michael Froman. He's now Counsel on Foreign Relations President. It's great to have him at the table.
Great to be here.
you know, I take my phone and I plug it into the car. And now, by the way, you don't even need to plug it into the car half the time. But if you want the power, which my battery's always low, I need to. By the way, you do this all the time in so many places. How worried do you? By the way, that's actually maybe the better way to start. Do you plug in your phone?
I do the same.
Okay.
Look, I think what it underscores is just how connected we are and how vulnerable we are to potential cyber attacks from China or from elsewhere, from just bad actors anywhere in our daily life.
But do you think we're particularly vulnerable to China? I mean, I think that actually is the fundamental question with all, you know, every day we have a different headline about China's security risk, China, you know, or it's TikTok, or it's this, or it's that. Are the risks coming from China severely more dangerous than anywhere else?
You know, I think this week we've seen a couple things. One is a new executive order sort of regulating the sale of data by data brokers, including to China and 5 other countries. And then we've seen movement on the Hill with a bill to put 100% tariffs on imports of cars from China. So I think there's a particular focus on China. I'm not sure the cyber security risk is specifically focused on China or should be specifically focused on China. There are plenty of bad actors out there engaging in cyber security intrusions. But there is concern that China is building up significant overcapacity in the auto sector, particularly the electric vehicle sector. And unlike steel and aluminum and solar panels, there's an effort to get ahead of it this time and try and figure out what do we do to make sure they're not dumping those cars on our markets
How much
and
of this is
undermining
a
our
security
industry.
concern, and how much of this is an economic concern?
Well, right now we have
just heard from Phil.
very little imports from China of autos, about $2 billion a year, and mostly, by the way, from GM and Ford, from U.S. automakers who produce in China. It's not the big Chinese
But we just
EV
heard
companies.
from Phil, our last report was about how they're going to be building in Mexico. If you've got NAFTA and stuff comes across the border.
Huge capacity, and I think that's what people are focused on. They're, again, trying to get ahead of it this time and say, this is a key sector for our economy. We don't want to find ourselves in the same situation we were in other sectors where we saw the overcapacity being built. The Chinese have to do something with all that overcapacity.
But here's the other conundrum. I don't know if you've seen some of the comments that Elon Musk has made over the past couple of weeks. He would tell you that the BYD vehicles are better than the vehicles that are being manufactured by just about every U.S. manufacturer, except in his mind, Tesla. Now you could say that is you may think he has motivations to say that for different reasons, but for what I don't disbelieve him, and there are a lot of people who've driven in the latest BYD vehicles who say this is pretty amazing.
There are several Chinese EV companies producing several kinds of electric vehicles that are very good. And so I think it's putting a challenge on our industry to continue to innovate and continue to try and come up with new models that people want. And these sorts of actions are about giving them the space to do that. Now, we could say, is that the best thing for consumers? But here again, I think the paradigm has shifted where it's not all about consumers anymore. It's not all about efficiency, getting the cheapest product to consumers or the cheapest, best product into the hands of consumers. There's an effort to say, well, we want redundancy, we want resilience, we want security, we want to have our own industry in key sectors, even if it means imposing a cost on consumers.
You're describing a really bad scenario for me. So not only do the big three got to compete against Tesla's EVs, now even China has great EVs.
Yep.
We just signed these labor agreements that make it very difficult to foresee how the big three can be competitive already with Tesla, non-union. Looks to me like the only way it's going to happen is the government's going to have to support the big three somehow, again.
Look, I would underestimate the capacity of the big three to continue to innovate. I think GM and others have been trying to
What evidence? Where have we seen them innovate in the last 10 years
I think
in EVs?
I think a number of them
The
have tried to
Bolt,
move
you can't
forward.
park near the front of your, or was it the Volt or the Bolt that you can't park near your house? If you have a wooden house, you can't park it near there because your house is going to go up.
Yeah. Like, this is a new sector. There's going to be a lot of change, a lot of new infrastructure being built, and I think the big three are trying very hard to play a
Who
significant
wants a
role in
big
that.
three EV? No, they haven't found a person yet.
Well, I don't think that's true, Joe. But I think what they're trying to do is create the space for it. Now, I think it comes at a cost, and I think politicians need to say, all right, there's a trade-off here. Do we want a U.S. EV industry, and what costs are we willing to pay for
Well, we
that?
have one. It's called Tesla.
That's what. Do we want more than that? And do we want a competitive industry?
If you build it, they will come. That they haven't built it yet.
Well, but the question is, if we let these cars in, maybe they would. And that's the flip side.
You think the competition
pressure
would make them
of
better,
competition.
you mean?
I could argue to you that
Why
one of the
isn't
reasons
Tesla
that
enough?
EV take-up has not been as high is because the actual cars themselves are not good enough.
All right,
It's
I
the
agree.
product's
But
problem.
you've already got Tesla as a model of what you'd like to be, and they're nowhere near that. And
So you're
why
happy
would-
to have a monopoly.
Huh?
You're happy to have a monopoly.
I'm not saying I'm happy, but if if it's a monopoly based on how good your product is, I mean, we've seen that in big tech too. Do you close down a big tech company just because they're so good at what they do? That's Peter Thiel's got a book out called that.
Winner takes all.
Huh?
Winner takes all.
No, I forget what it's called.
No, but that's the theory.
But it's about
That is the
if
theory.
you're really that good, you have a natural monopoly, but it's not illegal.
Yeah, but it also.
Except Lena Khan would call it
We also
illegal. 'cause
forget the
everything-
fact that all of these things, all of this industry is put together by
Subsidized.
subsidized by the
Right.
U.S.
Yeah,
government.
but at least people
Right.
come out to my neighborhood. Every car's a Tesla. Everyone.
Michael Froman, thank you. By the way, the Peter Thiel book, 0 to 1.
0 to 1.
Name of the book.
Coming up, Wendy's. Let's say, never mind. We weren't going to do this anyway. Facing backlash for its new pricing plan, now clarifying that it never really intended to implement surge pricing. Details next. That looks pretty good, though. Pay more for that. We'll be right back.
Right now.
Viciously.
Now, a follow-up to a story we told you about earlier this week. Wendy's is clarifying plans for dynamic, so-called dynamic pricing after facing backlash online and accusations of price gouging from politicians. Wendy's posted a statement on its website saying that its dynamic pricing plan has been misconstrued. It says it doesn't plan to raise prices at the busiest times and instead would use its new digital menu boards to change menu offerings during the day and offer discounts
No, so I said
It's a
this. the-
carrot, not a stick.
Particularly
No, so I-
at slower
Oh,
times.
I said this the
That's
other
it.
day
That's
on
not so bad.
on I think Morning Joe on another network. That the only that if at a busy time it doesn't work, but actually at a slow time it could work. So if you were driving past a Wendy's and there's a digital board up and it's I don't know
Sale.
10:30, 11 in the morning is a slow time and or
Sale,
3
yeah.
in the afternoon or something, and somehow there's a sale on and you can get I don't know the burger, the chicken nuggets for 99 cents or something, you might actually say,
Yes.
okay, I'll go do that.
That's totally different, and
That's
is a good
totally
idea.
different.
Yeah, it's a good
But if
idea.
it's at lunchtime or at dinner
Yeah, and
time,
they're raising prices.
and they're raising prices, and then you see the McDonald's is across the street because most of
who's
these
at
places
fault?
have
Who's at
5
fault
of these
for-
things lined up next to each other, you're going to go to the other
But we
one.
got it wrong. We got the store wrong by saying they were going to do it at busy times and raise prices. If the prices are staying where they are or lower, that's totally different than where they are or
I don't
higher.
disagree.
But over time,
They didn't explain that
you have
though.
to,
but
yeah,
yes.
but over time, the question becomes,
Do you raise it up
do
and
you
then go
raise it,
down?
and do your base level prices go up so that you can then offer the discount
Yeah.
at other times?
You eat at Wendy's?
Over time.
Sometimes.
The one thing I
We
will
do
say
all-
is it's a
get their
competitive
fries.
industry. It's a competitive industry.
Super
so-
competitive because they're all next to
Yeah.
each other.
Right.
Like every
And
street has.
anybody who
If
doesn't
there's a
have to
Wendy's,
lose-
there's a KFC, and a McDonald's
And
within.
talk about if it's a decent,
spitting
if it's
distance.
a decent street, it does. Yeah.
Welcome back, everybody. Boeing shares are slightly lower this morning after reports that the Justice Department is looking into the door plug blowout incident on an Alaska Airlines flight last month. Joining us right now with more on this is Ron Epstein. He is Bank of America Securities Senior Aerospace Analyst. Ron, this is fairly serious because it goes back to an agreement they had from years ago, several years ago, that this could raise some new problems and potentially criminal charges. Can you explain?
Yeah, so if you go back to actually early 2021, there was a deferred prosecution agreement that the DOJ agreed to with Boeing on the 2 previous MAX crashes. And part of that agreement was it was a $2.5 billion payment, if you will. Part of that went to airlines, part of that went to the families of the folks that lost their lives. And then part of that went to the government. I think it was about $250 million to the government, $500 million to the families, and then the balance was to airline customers. That was a 3-year agreement with the Department of Justice. The blowout of the plug door with Alaska Airlines happened actually a couple days, I think it was 2 days to be precise, before that agreement ended. So the DOJ is now looking and saying, hey, you know, did Boeing violate that agreement? And if they did, they can tear up the agreement and they could potentially file charges.
So the agreement being that they were going to make sure that there were safe and safety standards were followed, and this door blowout would suggest that didn't happen?
Yeah, so a couple things. So the agreement was one, and it's a little bit mind-numbing when you think about it. Part of the agreement was that they wouldn't deceive government regulators. You know, that's part of it. And then 2, that they would work on the safety and quality culture of the company. So the 2 things I think they're probably going to look at, I mean, I know for sure they're going to look at, is 1, did they work on the culture? And then 2, was there anything in the data set that was shared with the FAA and NTSB, was there anything missing that could be considered fraud, right? Because the current investigation is being led by the fraud department, that's what you call it, of the DOJ, and the U.S. Attorney in Seattle.
We can dig a little deeper into the safety and culture issues in a second, but what does this mean for investors right now?
Yeah, I think a couple things. If you're a Boeing bull, you're waiting for $10 billion of free cash flow. The company has said their guide for that is 2025 or 2026. It's going to take longer, right? Number 1 for the company today is quality, compliance, culture. That stuff comes first, and the financial targets will have to come later. So anybody that's waiting for that free cash flow target or whatever financial target you're looking for.
This Justice Department inquiry is pushing that off.
Yeah, that plus the NTSB investigation plus the FAA, right? Because you had Boeing CEO met with the FAA Administrator Whitaker just 2 days ago, I think it was, and then the FAA chartered a report with, I think it was with 25, 50 experts on the culture at Boeing, right? So you got all this going on. So it's the financial targets are clearly going to have to take a backseat to everything else.
What's your rating on the stock?
We're neutral on the stock, and the neutral ratings because the stock, my sense is going to be range bound until these clouds clear. Something kind of has to happen. You're in the midst of probably the strongest commercial upturn, I don't know, potentially in history because of the COVID downturn, right? So you have a huge demand for airplanes. However, Boeing's being held back by all of this.
Ron, we're out of time today, but I want to thank you very much for coming in.
You bet.
Thank you.
Okay, coming up, 2 big hours ahead. Google's recent AI blunder leading to an apology from the company's CEO. Should this be a bigger concern for investors chasing the AI hype? We're going to have that discussion straight ahead. Plus, the head of the ADL, Jonathan Greenblatt, is going to be with us. Talk about some new data on the rise in anti-Semitism across the country. Squawk Box returns after this.
outcomes.
Good morning. Futures pointing to a lower open as investors look ahead to the Fed's favored inflation gauge. Salesforce beating on earnings but forecasting single-digit growth revenue for the year. We will show you where shares are trading and talk other stocks to watch ahead of the open. And anti-Semitism on the rise in the United States. We'll bring you a new survey with some startling numbers from the Anti-Defamation League. The second hour of Squawk Box begins right now.
Good morning and welcome back to Squawk Box right here on CNBC. We're live at the NASDAQ market site in Times Square. I'm Andrew Ross Sorkin along with Becky Quick and Joe Kernan. Take a look at the futures. We still got about 2.5 hours before the market's set to open, but right now we'd open down about 108 points off on the Dow. NASDAQ down about 20. The S&P 500 down about 8.5 points. Take a look at Treasury yields as well. You're looking right now at the 10-year note sitting just at about 4.303, the 2-year at 4.683, and then crypto, which has been on the move, Bitcoin specifically, now at $62,985. Ether at $3,550.
Say that again. Just say the 62 again.
62K.
We say it so easily.
Actually, $5. Oh, 63. Keep watching.
But it was just 27. It was just, and before that it was 17.
And before that it was 60.
Right.
Yeah. Let's get to.
You're still hanging your hat on.
No,
Hey, you were
I'm
right.
saying
You were right.
it moves around.
You're right. You're right. It's a crappy investment. You're right.
You're right. You know.
63
Dom Jim, with a look at this morning's market movers. Dom.
We just need 6,000 more dollars, and we get back to those record highs for Bitcoin, Andrew. Right. So anyway, on the stock side of things, let's talk about our stocks to watch this morning. We're going to start with a tech giant and Dow component, and that's Salesforce. The enterprise software and cloud computing company, and also Dow component, is down just roughly maybe 1% or so on around 35,000 shares of trading volume. That's well off its extended hours lows, by the way, which it hit shortly after yesterday's closing bell. Post earnings, it was at that point down around 7% just after 4 p.m. Eastern time. Salesforce actually beat estimates for quarterly profits and revenues, but its full year guidance for revenues came in lighter than some estimates, which was enough to trigger weakness in the stock that, as you can see here, that's already run up by some 82% over the last year. So Salesforce did, by the way, also boost its stock buyback program by an added $10 billion and initiated a new 40-cent per share dividend on a quarterly basis. So on balance, down 1%. We'll stick with the tech earnings side of things. Shares of Snowflake, I guess you could say they're melting. Down about 23% right now, just around 400,000 shares of volume. The data management and cloud computing company also reporting better than expected quarterly profits and revenues, but current quarter revenue guidance was below forecast, and this is maybe the more important one. Snowflake also announced the retirement of CEO Frank Slootman. He's going to be replaced by former Google ad chief Sridhar Ramaswamy. So maybe a lot of drivers there for a 23% downside move. And then we'll cap things off with a check on a couple of auto-related stocks, Group 1 Automotive and AutoNation. Both you can see here up fractionally pre-market, thanks in part to analysts at Morgan Stanley, led by Adam Jonas, who've upgraded both auto dealership stocks. Each one goes up to equal weight from a prior underweight. They cited things like incremental optimism due to relatively stronger new car pricing and slower electric vehicle adoption trends. On balance, Joe, Group 1, AutoNation, each up about 0.5%. I'll send things back over to you.
All right, Dom. Very good. Thanks. Let's get a check on the markets with our next guest. Paul Hickey is co-founder of Bespoke Investment Group. You like to focus on tech, and that was smart. Lucky you weren't focusing on steel or something like that. So that was smart right from the beginning. I'm fascinated by what you're saying in terms of the backdrop, which includes the Fed and inflation and interest rates, all these different things, wars. But the one thing that takes precedence over all this stuff has been AI and its effect on the market.
Yeah, exactly. So if you look, there's several different AI-related ETFs. They hold stocks from all over the world.
How many? And I'm sorry to interrupt, but you said something very interesting. How many of the S&P 500 are AI dependent or AI related? You have an actual number?
Yeah. So within these ETFs, there's 67 stocks that are in the S&P 500. So you tend to focus. Oh, it's only on the Mag 6 or 4, whatever it is at this point, but other companies are going to benefit, as with any technological improvement. But the key is that since the launch of ChatGPT, the AI, those 67 AI-related stocks are up an average of over 40%. Rest of the S&P, 8%. If you just look year to date, over 4% for the AI-related stocks, 2% for the non-AI-related stocks. So every day we focus on the economic data and better than expected data, how it's going to push out the Fed rate cuts. But what people are missing, that's not what's driving the market. It's these AI-related stocks and the perceived benefit of them down the line.
When NVIDIA reported most recently, the headline on all the major papers were global stock markets hit new highs on NVIDIA. And it was like, that was so mind-boggling. And I understand animal spirits, and I understand 1999, and I can understand all that, but you've got actual evidence of why that would make sense. Not just one stock, but it has been important for a whole universe.
Right, and people say 1999. Well, let's, Jensen.
1997 and a half, how's that?
Yeah, no, but Jensen Huang, he's biased, but he's, talks about AI being bigger than the internet. So let's go back to the internet and the key events of the internet. You had AOL in 1991, and then you had Netscape in 1994, right? If you compare how the NASDAQ performed following the launch of both of those, Netscape made the internet navigable, AOL brought the internet into our houses. And you compare it to now, we're up 50% in the NASDAQ since ChatGPT was launched, which was basically the bear market low of that period. In those two other periods, if you go a comparable amount of time, just over a year, you saw similar rallies in the NASDAQ on that. So there was plenty of volatility in the NASDAQ going forward in those periods, but the path was higher. So I think, to say that we're necessarily in the late stages of this rally, I would, just look back at the 90s and say, well, maybe we're not.
What did you say, 91 and 90?
And 94. December 94 was Netscape.
So one's 8 years and one's 5 more years till 99.
Right, so we're
till we were
over
partying like it's 1999. So what besides NVIDIA, are you putting these into your portfolios? What are you putting in?
So, we're looking, the two sectors, technology is one sector that's going to benefit, but you also have to focus on the consumer discretionary sector, the companies that have the most contact with consumers. You saw ServiceNow in their last earnings report talking about how their chatbots are increasing customer service. You saw Klarna say that their AI-related chatbot has replaced the need for 700 workers. So it's going to create a lot of efficiency in not having to have these customer service representatives answer requests and have the AI do that. So right now, and in these early stages of any technology revolution type thing, you're going to see the benefit accrue to the tech sector, but then eventually it broadens out to other areas of the economy.
All right, so just get back, give me your favorite AI stocks then. Let's say if I was allowed to buy them, what should I be buying?
So, I think within the, Shopify as a company,
That's an AI stock?
Well, and Amazon, those companies, they can take all the consumer data and look, what do you want to buy? They're going to predict what do you want to buy. Even in the fast food sector, you talk companies like McDonald's, you have a restaurant brands, QSR, which is the chairman is Patrick Doyle from Domino's, who basically turned Domino's into a tech company. You're going to be able to take customer behavior, predict customer behavior, and benefit from that. So it's not just a tech story for the long term, although that's what we're seeing right now in the short term.
Okay, thanks, Paul. Is that booze or barbecue sauce?
It's Thursday, right? This is the best day of the week.
It is.
Yeah. So
what is that?
It's rum. Two types of rum.
2 types of rum.
Yeah,
Right.
Mount Gay and Myers.
Myers.
I'm not sure which is less hangover causing.
I would say Myers is a little bit more of a hangover.
The dark stuff is deadly. It's like Jägermeister or something. You never survive.
No. In moderation, right?
Take everything in moderation.
Meantime, let's show you shares of Best Buy because they're rising right now. This after quarterly results just coming out, adjusted earnings of $2.72 a share. That's 20 cents better than estimates. It's on a revenue of $14.65 billion. That was also a beat. Same-store sales, though, fell 4.8% during the quarter, but that was better than the 5.4% decline the street had been expecting. For the full year, Best Buy is seeing adjusted earnings in the range of $5.75 and $6.20 a share. That compares to estimates of $6.16. So you're sort of seeing things move around here. The revenue in range in terms of what they're expecting, 41.3 billion to 42.6 billion, with estimates of 42.33 billion. The stock up close to 3% on the back of that news. Coming up on the other side of this, the CEO of energy drink Celsius is going to join us. We're going to talk consumer demand, the energy drink market, and the company's latest results. This has been a high flyer. And then later, 24% of Americans foster anti-Semitic prejudice. That's according to a new survey from the Anti-Defamation League, and we're going to talk about it with the ADL CEO and National Director, Jonathan Greenblatt, who will be at the table to talk about this study and what it means. Squawk Box, come right back.
Or download the app.
Welcome back to Squawk Box. Energy drink maker Celsius out with fourth quarter earnings this morning, beating street estimates, reporting revenue of $347 million. It's up 95% year over year, and this thing has been on fire. John Figley is here, Celsius' CEO. Good morning to you, John. Nice to see you. As I said, this is a beverage company that has just, I mean, you guys have just been, it's been a wild thing to see. How quickly can you continue to grow at this pace?
Yeah, it's exciting. How quickly we can go. There's huge opportunity for us in the category. We're celebrating today the first time in company history we broke $1 billion in revenue for a year, 1.3 billion in revenue. We're truly a $1 billion company and over $1 billion brand. So it's exciting. There's a ton of runway. The energy category is one of the fastest growing categories in food and beverage, and we are positioned for today's health-minded consumer. We're at 11.5 share in the category right now. We're one of the fastest growing drivers in both dollars and units. So we see a huge runway ahead.
So when you think about the brand of Celsius, do you see it as an energy drink only brand? You've tried to carve it out in this space of being fit and for fitness folks, if you will. How far can you extend it beyond drinks, if you would?
Well, that's the unlock and the opportunity here. You know, we started off in the gyms and health clubs. Really, we marketed the product in the early days as a pre-workout. We gained more awareness, especially with the growth in fitness. It became a fitness lifestyle brand. And with our partnership with Pepsi, which we just celebrated a 1-year anniversary, they've expanded us into broader distribution. So we see a huge opportunity. We just went into Jersey Mike's as well, and our great flavors. I'm drinking an Oasis 5. We have a kiwi guava with some great, really refreshing flavors. We just launched a Cosmic Vibe this year, which is a really refreshing fruit punch. So we're seeing Celsius paired with meals. Like at Jersey Mike's, we just went into Dunkin' Donuts as well, over 3,000. So we see the big category for Celsius even bigger than the energy category. And we also have a fizz-free line we just expanded in 2024. We're excited about that.
You do have the partnership with Pepsi. I think there was a question for a long time, and I don't know if the question's been put to bed, whether this is a company that remains independent, meaning yours remains independent long-term or gets swallowed up and owned by a larger drink maker. How do you think about that?
Yeah, I mean, we have a great team here. Our team's working hard, one of the best in the business. We actually just won Supplier of the Year at 7-Eleven. We're breaking records each and every day. You know, the foreseeable future is to be #1 in the energy category, and that's what we're working on. You know, we're publicly traded, so we're for sale every day of the week, I guess, if you look at it.
How, the other question I'd have, which is more of a consumer sort of news you can use question, which is, you know, I think a lot of people, some people have sort of obviously fallen in love with energy drinks. There's a lot of other people who I think are still scared of energy drinks because they think, oh my goodness, is my heart going to go faster? There are questions about, you know, if you drink too much of this stuff, what it does to your kidneys or your liver. And I know you guys have tried to address some of these things publicly, but how do you confront those issues?
Well, I think when you look, that's what's unique about Celsius. I mean, when you look at our formula and our ingredients, we have over 2.8 grams of vitamins, of green tea, ginger, biotin. So when you look at some of the formula ingredients compared to some of the competitors that are out there, we're much better positioned. We actually, one thing that's interesting is we're contributing to the growth of the category. So a lot of new consumers coming into the category for the first time are really trying Celsius and enjoying it. One thing we hear is no crash, no jitters on the product from a lot of our customers versus some of the other products that are out there. You get jittery on them and there's some other complaints and negativity on it. So we hear that hands down on our product. We are a better for you energy drink and really align with today's health-minded consumer looking to live a better, active lifestyle and accomplish their goals.
When you sit around on a Monday morning, if you were to put up a whiteboard and draw out who you think your competitor set is, who are you looking at? I mean, is coffee on the list? I assume Red Bull's on the list, and Monster, and I don't know. We can go down the list, but how do you think about that?
Oh, yeah. We're hyper paranoid, always thinking about the list. Our Monday morning ritual is very intense as a group here and a leadership team within the organization. Our competitors, we just came into the #3 energy drink and growing rapidly. So it's going to be Red Bull, Monster, and then Celsius. So we're looking at a 3-team race here as we enter into 24 and beyond. So we're really excited. We're #1 in the energy category on Amazon. We do extremely well in other platforms and other regions of the country. So it's really an exciting time. We do see coffee as a competitor as well, especially some of the cold offerings. We have a non-carb line, and we have a peach mango green tea, which is really phenomenal and differentiated in the energy category. So we really see this going beyond energy.
John, it's nice to see you. You've got a lot of energy. We're in the morning show business. We could sometimes, some days I need more energy than others. I drink probably too much coffee. Maybe I need to rethink.
But we sent some Celsius up to start your day, so you guys have it in the studio.
Years ago, I shouldn't tell them this, but this is pre-Celsius. I don't know if you remember when I first started on the show. I used to drink. No, I used.
Okay.
I used to drink Diet Red Bull or sugarless Red Bull.
I remember.
You remember that?
I do.
The sugarless Red Bull because you didn't want to crash. but these hours were so crazy.
So this is
but
you
can't
on
get
Red Bull.
You can't get too. Part of the reason to get rid of caffeine is you can't get too amped up either.
Yeah.
I think it's going to be like that on the morning show.
I think it's good to be awake.
He said he sent some. Where'd they send it to the wrong place?
You
Do we
don't
have?
get jittery.
I don't know. We'll get
It's
you
out in Englewood Cliffs.
We'll get you some Celsius, Joe. We'll get you some Celsius.
Coming up, no,
Yeah, you amped up.
rum, yeah. Coming up are the mistakes by Google, by that Gemini, a cause for concern in the world of AI. John Fort joins us to weigh in. Probably see both sides of that argument. Futures right now continue.
Good guess.
Yeah, it is. Continue to be in the red, down 130 on the Dow. We'll be right back.
Time now for today's Aflac trivia question. Who was the first African-American actress to win an Oscar? The answer when Squawk Box returns.
Possibly have.
And now, the answer to today's Aflac trivia question. Who was the first African-American actress to win an Oscar? The answer? Hattie McDaniel. McDaniel won the Academy Award for Best Supporting Actress for her role in Gone with the Wind.
Google CEO Sundar Pichai saying this week that the company's Gemini AI chatbot's inaccurate depictions of people were unacceptable. So are Gemini's mistakes a cause for wide concern? That's the question of the morning, and John Ford is here to weigh in. What do you think, John?
Yeah, happy Thursday, Andrew. Well, yeah, Gemini's inaccuracies are an enormous problem. Right now, we're talking about these new generative artificial intelligence systems revolutionizing search, literature, the way our society is going to access information. So if the AI has built-in biases, then it's poisoning us all. So how did this latest controversy start? Well, last week, users began to notice Google Gemini's image generator inserting people of color into scenarios that didn't make sense, like responding to a prompt for an image image of a German World War II soldier with a picture of an Asian woman or a black man. Now, naturally, this week, people started piling on with more questions. When they asked, Gemini apparently couldn't say which was worse for society, Elon Musk tweeting memes or Hitler. Critics are rightly calling this out because it's dangerous. The ideas these left-wing tech overlords are serving up might shape our reality. If they're based on political bias and historical inaccuracies, these tools quickly stop being productivity tools and start being propaganda machines, Andrew.
So can we expect artificial intelligence to ever really tell us the truth? I mean, let's be honest here.
Well, Andrew, on the other hand, the problem isn't so much Gemini itself. The problem is the assumption that we should trust AI to draw us a picture of a Nazi instead of researching historical photos of actual Nazis. It's the idea that we should believe AI has the capacity to make judgments at all about good and evil. By dunking on Gemini, we're actually dunking on ourselves for not bothering to do actual research and expecting Google or Amazon or OpenAI to deliver us accuracy and nuance by default. I'm sure it's a total coincidence that this is blowing up in an election year when affirmative action, overwoke campuses, and replacement theory are raging in the national zeitgeist. But is it a problem that Gemini is returning nonsensical images in a candy wrapper of history? Sure. It's also a problem that we expect software that still can't accurately render human fingers and toes to have somehow figured out global race and culture. Now, sure, Google should immediately stop spreading misinformation, but why are we already holding AI to a higher standard than we hold our human leaders, Andrew?
There's a long history of this, though.
There is. Tay from Microsoft got corrupted, right?
Years ago.
Years ago. So, you know, it's
that was one of the early chatbots.
Yeah, somewhat important for humans to corrupt these
some of the early Google efforts were corrupted too, on the other side of the bias sort of side.
So for those of us who are afraid that this AI is going to take over our jobs and do it, I mean, between the fingers and toes and not knowing what a Nazi looks like, we're still a little ways off.
It's weird because AI supposedly crossed the Rubicon to be something really amazing and powerful, and you're saying it's just still early, and that eventually you get the bugs out of it and this kind of stuff won't happen. But I thought that's why it's been such a major force for the last year and a half or whatever. I thought we had gotten to the point where I mean, if we get to this point, it's still, that looked like Gigo to me, garbage in, garbage out.
Did we ever get past that? Because I thought AI was supposed to get to the point where it could think and reason and do these things.
Yeah, it should be able to have judgment.
Is it always going to be Gigo?
It's a little scary to take your hands off the wheel. It's like, I mean, all of us had like amazing 7 or 8 year old kids at one point, but then it's like they do something, you're like, oh, well, actually.
But is that a reason to sell off some of the euphoria that's been built into this, if it's not as good as we've been told?
Well, I mean, I certainly think until the fingers and toes get figured out, right? We can guess at there are other finger and toe type issues.
I mean, I remember the way the old Twitter was and got so much flack for that, and then Elon, and it's all changed and so on. This just makes me think that you let a bunch of these Silicon Valley type libs make the AI, it's just a reflection of them. I thought AI was supposed to be its own thing. It's not supposed to be a reflection of the people that program it.
And I'm sure you will
always be a reflection of the people.
Well, then it's going to be Gigo. It's no better than anything else.
You know, it's just who's garbage? Is it the liberals' garbage or the libertarians' garbage?
Right.
But figure it out.
Pick your garbage.
Yes, and pick it on the On the Other Hand newsletter. There's plenty of great garbage in there, and you can use the QR code on the screen or type in cnbc.com/OTOH and get the full text of both these arguments you can share, or you can argue with yourself using it, that's what I do.
Yeah, we do too. John, thank you. When we come back, we're going to talk about the problems facing the housing sector with Taylor Morrison CEO Sheryl Palmer. Right now, though, as we head to a break, check out shares of Okta this morning. The cybersecurity giant beating earnings and revenue estimates, citing strong win rates. Shares look to open at or near a 52-week high this morning. Bank of America actually double upgrading that stock. It looks like it is up by almost 25%. Squawk Box will be right back. Welcome back, everybody. Higher mortgage rates continue to impact demand from potential home buyers. The CEO of one of the nation's largest home builders joins us right now. Cheryl Palmer is Taylor Morrison's chairman and CEO. And Cheryl, thanks for coming in today.
Great to see you. Thanks for having me.
Let's talk a little bit about how things are going, because we saw interest rates start to come down and then rise back up. What does that mortgage rate mean for the buyers? What does it mean for the builders?
Yeah, you're right. It's been a little bumpy over the last, 12, 18 months. And in the fourth quarter, we saw rates drop back into the sixes.
Yeah.
And what was so nice about that, Becky, is the consumer's actually in a very different place than they were a year ago, 18 months ago, where they thought rates were going to, be back into the threes or maybe low fours. So the consumers kind of met us halfway. So when they dropped into the sixes, we had the ability with all of our tools to get them comfortably into 5% interest rates. And I think the consumer recognizes, by any long-term historic standard, that's a really good thing. Today, they've moved back up. I mean, the 10-year's at 4.3. Yeah. Rates have moved into the low sevens. Interesting, we just reported our earnings, and last quarter, the average coupon of all of our closings rate was like 6.7%. So it really tells you how far the customer and the consumers come. But once again, we have the tools to get them into the low fives, the mid fives, really personalize a rate based on what their needs are.
What tools do you use, and what does that mean for your profitability?
Yeah, it's a number of different tools, and I think not painting all customers with one brush is probably the most important part of that. Some customers need a little bit of help with cash at closing. Some want the confidence of a 30-year fixed rate, and so we'll do forward commitments. Some need a temporary support, so they might do a 2-1 or 3-2-1 buy down. That 6.7 would be the final coupon rate, but it tells you what they expect to have happen. The cost of when we first started doing this a couple years ago was actually much more significant, because we were trying to go from the sevens down to 3.99 or 4.25. Today, when we're looking at 5.5, 5 and 5.75, it's just not as bad.
Meaning customers are thinking, okay, 5.5 sounds pretty great to me right now.
That's right.
Versus 2 years ago, that was sticker shock.
As silly as it is, they went to 8 so quick that I think it kind of reset the customer's mind so that they don't expect that they're going back to 3.99.
So every time Diana looks on, she says, yeah, it's not a demand problem.
It's not a demand problem.
So why aren't you building more? Why aren't home builders matching in? If you can sell, why don't you match the demand? Why can't inventory match the demand? It takes time, or?
Well, we have, if you look at the new home inventory across the country today, I would tell you it's a really healthy, probably 7 months of supply. The real important detail there, Joe, is what is the finished inventory, and that's relatively low. So I think that's actually a really nice balance, because I think we're like 1.4, 1.5 months of finished inventory. I want to have inventory at all stages of the production cycle, and we do. The resale inventory is also pretty tight, and that's the lockup effect you keep hearing about. I think we just moved to about 3 months, but the devil's always in the detail.
How's land? Do you buy big plots of land? I can remember in years past, Lennar, somebody got in trouble. They had spent so much money, and then the land prices dropped, and they were stuck with it and had to write down. But how do you do that? Do you buy a huge swath of land to put up a development?
We do. We're a developer first.
Is it based on mortgage rates too, or?
Well, when you underwrite the land, recognize land I'm buying today is not coming to market for 2 to 3 years. So it's really the land that I bought, back in 21, 22. When I look at Taylor Morrison, we still have just under 50% of our land that's purchased pre-COVID. So it's actually in from what it's sitting on our balance sheet, it's in a really good place. But yeah, we buy parcels. Our average is probably 150 lots, Joe. But we'll do, we build for all segments. So when I think about our active lifestyle communities, those could be 500, 1,000 units, golf courses, lakes, big amenity packages.
But to put all of those loans, interest rates have gone up, so it means you have to pay more for every one of these purchases you make, for every one of the builds you do. What's the limiting factor right now? Is it, it's too expensive to build the homes? Is it too hard to find people to build them? Like what would be the limiting factor when you look
Yeah, so I guess a couple things there. One, all consumers aren't created equally. So when I think about the support that we need to give to that first-time buyer, they may not have the equity in the house that a move-up or a 50-plus, lifestyle buyer has. So most of our incentives back here are going to really support that first-time buyer. You look at the average equity that's out there today, and I think I just read something that said, if you've owned your home about 4 years, and you bought a medium-priced home about 4 years ago, you have over $200,000 in equity. So they have, if you bought it in 2000, you might have over 400,000 on average. So they have other levers to pull. As far as the labor environment, I'm not going to say we're back to pre-COVID, but we are much better placed than we were these last 18 months where the entire supply chain was really challenged, and labor. Today, I think, honestly, it's very predictable, dependable. There's always going to be something, but it's not everything any longer.
That's great. Cheryl, again, I want to thank you for coming in. You did just have earnings that came out. We appreciate the timeliness for why you're with us.
Thank you. Good to see you.
Nice to see you.
Coming up, ADL CEO Jonathan Greenblatt on the rise of anti-Semitism in the U.S. He has a new survey, and the numbers are staggering. And then in the next hour, the Chief Investment Officer of Bitwise is going to join us. His thoughts on the rise of Bitcoin and the impact of the spot ETF on digital currencies. Maybe Ethereum's next. Check out crypto prices this morning. Yep, that's not a misprint. 62,500 for Bitcoin. We'll be right back.
Shares of Paramount Global are higher. Fourth quarter sales fell 6% as ad revenue on traditional TV channels shrank. But earnings of 4 cents a share did beat estimates for a break-even quarter. And the company is predicting that ad sales will climb in the current quarter, driven in part by record revenue from the Super Bowl. Subscriber numbers for the Paramount Plus streaming service rose by 4 million from the prior quarter to 67.5 million. That beat estimates. On the call, executives said that the streaming service should be profitable in the U.S. next year.
We are watching the shares of AB InBev. Fourth quarter sales came in slightly ahead of estimates at 6.2% growth, but revenue in the U.S. fell 17.3% in the quarter as sales to retailers dropped by more than 12%. The company primarily attributed that drop to declines in the sales of Bud Light, which, as you know, lost its spot last year as the best-selling beer in the U.S. Still, the company's profit and revenue grew last year, thanks in part to price hikes. Separately, the brewer reached a tentative collective bargaining agreement with the Teamsters Union that averts a strike at 12 major breweries in the United States.
Coming up, some startling numbers on anti-Semitism in the U.S. ADL National Director and CEO Jonathan Greenblatt is going to be with us right after the break. But ahead of that, take a look at the futures. We're also going to be getting jobless claims numbers that could move all of this around in just a little bit. But right now, the Dow looks like it would open down about 132 points. NASDAQ off 45 points. The S&P 500 looking to open off about 14 points. We are coming right back after this.
According to Just Capital, only 11% of Russell 1000 companies disclose 2024 race and ethnicity diversity targets for their management teams. But that's up 9% compared to 2023. Celebrating Black heritage, I'm Sharon Epperson.
The trial.
What
Welcome back to Squawk. A new survey by the Anti-Defamation League finding that anti-Semitism is still on the rise in America. Results show that nearly 1 in 4 Americans are prone to believe in anti-Jewish conspiracy theories. It's the highest level in more than 3 decades and up from 20% 2 years ago. The survey also showed that more than 42% of Americans either have friends or family who dislike Jews or find it socially unacceptable for a close family member to support Hamas. For more on the findings, I want to bring in Jonathan Greenblatt, CEO, National Director of the Anti-Defamation League. Surprised by these results?
Unfortunately, I'm not. I mean, we have watched at ADL this trend line move in the wrong direction for the last 5+ years. And to think in 2019 it was just 11% of Americans had extensive, intense anti-Semitic attitudes. So to see that more than double in just 5 years is shocking. But look, this is playing out on our college campuses. This is playing out in public spaces. So it's not entirely a surprise.
These polls were taken when?
In the first half of January. Okay. So this is, ADL's been studying anti-Semitic attitudes since the 1960s. And we run these sort of like sentiment analyses every 2 to 3 years to gauge in baseline where public attitudes are.
How connected do you believe that these results are to what's happened in Israel and to the response that Israel has had to the attacks?
Well, look, it's a good question. I think in 2016, things started to change when extremists started to feel like they had permission to express anti-Semitic attitudes. And then since the October 7th massacre, like the sewers, the lids have been blown off the sewers by the anti-Zionists. So keep in mind,
I don't want to conflate anti-Zionism with anti-Semitism, but
they're the same. They're two hues of the same color.
Okay.
But here's what
some people, well, okay, continue on.
I mean, here's what I would tell you. In 2022, right, when Israel had a coalition government with Arabs and Jews in the government, Muslims and Jews working together, we had the most number of anti-Semitic incidents we ever tracked in America. So this idea that Israel causes anti-Semitism is wrong.
Andrew, I mentioned the piece in the Journal today. Interesting. Last 2 sentences. Progressives claim that being anti-Israel or anti-Zionist isn't the same thing as being anti-Semitic. Tuesdays at Berkeley shows how dishonest that claim is. And if you don't know what happened in Berkeley, and my point is, okay, we learned nothing from Harvard. We learned nothing from what we've seen at all these Ivy League campuses. Berkeley, what is Berkeley known for? The most progressive campus in the country. Nothing is worse. They don't suspend these students that show up and spit on these kids and make these kids think that they may not walk out of there alive. They don't even suspend them. Nothing has changed, John.
The lack of leadership at these college campuses is a catastrophe.
And nothing's changed. You've made no progress, have you?
Well, I would like not, I mean, look, we are pressing Title VI cases against many of these institutions, right? We're going to hold them accountable. We've been working with the Education Committee in the House to put them in front, and we saw what happened at Harvard and at Penn, so they're being held accountable. And I'm told that applications are dramatically down at Harvard. And you saw the Jeff Sonnenfeld story in the Journal last week. I mean,
this was this week.
I know. I mean, this was Sunday night. And so for the viewers who don't know, 2 Jewish women were assaulted by a throng of pro-Hamas protesters. Right. And look, something is profoundly wrong when the university thinks it's normal for people to converge on the campus with their faces totally covered by scarves.
They said they're helpless. The administrators say there's helpless, nothing they can do about it.
Well, here's what you can do. Number one, enforce the law. You break windows, you assault people, you should be arrested. Number 2, ban masks on college campuses. I'm not talking about a COVID protection. I'm talking about someone who's there and screaming about the Intifada, then assaulting people. How does anyone think that's normal? And then number 3, I think the thing we also need to talk about is we need to overhaul, and I've talked about it on the show before, we need to overhaul DEI. Because the idea of diversity, equity, and inclusion that perpetuates the exclusion of Jews is just wrong. And I believe in diversity education. I think it is important, but it's got to be done differently.
Okay, so how would you do it?
Better. How do we do diversity education differently? I think, most of these programs, we've studied them.
And are you talking about DEI programs inside universities? You're talking about DEI programs inside
corporations,
businesses?
et cetera.
Okay,
Like, this is why we launched our workforce pledge at ADL. 250 plus companies have joined. If you have a DEI program that doesn't include Jews, the most targeted religious minority, you're doing it wrong. That's the opposite of diversity. So that's got to change. So we think that companies need to either adapt and rethink the way they're doing this all together. That's overdue to happen in all these places.
What should Netanyahu do at this point? And
what should Bibi do?
Yeah, and what should Biden be doing? He's already under some pressure, but Hamas is not. It's not nowhere close to taken care of at this point.
Look, number one, the hostages need to come home yesterday. Right? That's the thing that I know I'm focused on. It's why I wear the ribbon. It's why I wear my dog tag. They've got to come home. Beyond that, I'm not a military strategist. I'm focused on fighting hate here in America.
But I don't think that the political will is going to be there for them to do what they need to do because of exactly what you're talking about.
I mean, it is alarming to see how the sand seems to be shifting. And
you predicted it. When you said that there's no way public opinion is going to hold up to do what is not to eradicate
Hamas is a genocidal organization that prioritizes killing Jews. It should be unacceptable yesterday, today, and tomorrow. So whatever the future government in Gaza might be, it can't.
Okay, but so what did you think about what happened in Michigan?
Meaning the people voting like I don't know. Yeah. I'm old enough to remember when you were upset about policies that a government was doing or that your political party was doing, you actually got involved. You didn't pull back. You said, I want a seat at the table and I'm going to earn it and then demand. I think what's happening is ridiculous. And how's that going to help economic opportunity for the people of Michigan? How's that going to help make that state better? How's that going to help the Democratic Party win?
People who just voted.
I think these people voting uncommitted, I think it's pathetic. And if they really want to make a difference, they should roll up their sleeves and get involved. But you know what, Andrew? I hope they like what the other guy will do. I'm sure he'll listen to them, I mean, it's absurd.
The institutional, you said it's taken years for this to happen. The academic makeup of these colleges hasn't changed one iota.
What do you mean the academic makeup?
The people that have been hired and have tenure that are where a lot of these ideas are being sown and put. I don't think these students, are they coming up with all this on their own? This is not being taught? And how do you slowly weed out, how do you weed out what we're seeing on all of our best
Not just being taught on college campuses. You look at TikTok, you look at any of these.
Yeah, I mean, social media we've talked about, it's a super spreader of hate, but the cultural rot at these institutions, you need to go in there and remediate it one by one.
It's not going to happen. How are you going to do that?
Yeah, let me ask you a different question. You just said, what's the other guy going to do?
Yeah.
There is a view the other guy, who's former President Trump, is more, look, some people would say he's more pro-Israel, and then there's other people who would say that he has said things that are anti-Semitic himself. What do you think?
Well, look, President Trump has a closer relationship to the Jewish people than any president in history because he has Jewish grandchildren in the West Wing. And he clearly has a set of views. I don't agree with everything that he's done or did, but look at the Abraham Accords. That was unquestionably
Right. So
good.
for your purposes, when you said, well, what's the other guy going to do?
Well, I think
for your purposes, where do you land on that? That's a very interesting question.
We're a tax-exempt apolitical organization, but we're doing our big conference next week, and we're hosting Jared Kushner at the ADL's Never Is Now conference, along with Albert Bourla and Julie Sweet and Mark Rowan. And why are we hosting them? Because the Abraham Accords, whether or not you like what the Trump administration did, were unquestionably good. And we need to be bipartisan. Here's what I would say, Andrew. More than ever, our Jewish community and really the country needs to find ways to come together. If you only see the world tinged through your lens of red or blue, you're seeing things wrong. And like Joe, I mean, I got to tell you, I know you have a lot of strong feelings about this, but if this country doesn't come together, divided we fall. I mean, I don't understand why this is so hard.
It's not, the side I'm representing isn't responsible for the division. And to hear Hunter trashing Jared, did you hear that yesterday? So, well, what about that? That was his defense for his escapades.
Look, I can't speak, I don't want to talk about Hunter Biden, but what I will tell you is this. there is good and bad on both sides, and you got to listen to people.
I'm glad you
even
said
those
that.
who
At least
disagree
he's got
with.
grandchildren and living in the White House, so you know you said it a bunch of times,
Yeah.
Charlottesville or whatever. I mean, let's live in the real world, shall we? His daughter, I mean, it's Jewish kids, Jewish grandkids.
Jonathan Greenblatt, thank you very, very much.
Thank you, guys.
Nice to see you.
When we come back, leaders of the China Select Committee join us to talk U.S.-China challenges. They just got back from a trip from Taiwan. And then the chief investment officer of Bitwise on the rise of crypto prices, spot ETFs, and whether an Ethereum ETF is on the way. We'll be right back.
Good morning. Happy Leap Day. It's bonus day for the markets and the final day of February. Major averages on pace for their fourth straight positive month. This hour, we're going to get PCE inflation data. This is the Fed's preferred measure. We'll bring it to you. But before that, can anything stop the latest Bitcoin surge? Crypto prices on the rise again this morning. We're going to speak with the chief investment officer of one of the new spot ETFs. The final hour of Squawk Box begins right now.
Good morning and welcome back to Squawk Box here on CNBC, live from the NASDAQ market site in Times Square. I'm Joe Kernan, along with Becky Quick and Andrew Ross Sorkin, and not a pretty picture. Now that's a beautiful picture. This is not so pretty. Down 127 points. Are we consolidating here? We haven't had any big up days, and for it seems like about a week now, at least not in the averages, but we're maintaining these are pretty lofty levels.
Now you just sound like you are spoiled. You know?
I want it to
A little
go up
bit of a
every
give
damn
back.
day, every day. I want it up. I like let the good times roll. Treasury yields. You see our Taylor Morrison guest. He moved to the basis point where the 10-year was.
Yep.
Home builders watch very closely to see where mortgage rates are headed. Let's get right to our first guest of the hour. They're just back from a trip to Taiwan where they met with senior leaders on security, trade, and investment as tensions with China bubble. Let's bring in Congressman Mike Gallagher of Wisconsin, chairman of the House Select Committee on the Chinese Communist Party, and Democratic Congressman Raja Krishnamurti of Illinois, ranking member on the committee. You guys seem like you're okay together. That's good. That's a start in today's environment. Congressman Gallagher, I'll begin with you. What'd you learn?
Well, we just spent 2 15-hour flights together, so we really bonded on that. But I think the most important thing from the trip is that Taiwan just had a very successful election. It's the first of roughly 40 democracies that are going to be going to the polls this year. And despite the relentless attempts by the Chinese Communist Party to interfere with that election, to influence the outcome, Taiwan's democracy prevailed. It's a remarkably free society, and we have great partners there. I was very impressed with the meeting we had with the president-elect, William Lai. I expect him to build off outgoing President Tsai's legacy, but we need to learn some lessons from their democratic experience and make sure that nothing can interfere with our upcoming election, which is why I think it would be sensible for us to ban foreign-controlled apps like TikTok or force a sale to an American company before they dominate our news ecosystem. Beyond that, I would say we need to be doing more to speed the delivery of the weapons that Taiwan has purchased but remain backlogged right now.
You have similar thoughts on this? You agree with everything that Congressman Gallagher just said, Congressman?
Yeah, I echo his sentiments. Two other takeaways, Joe. One is that in every conversation that we had, whether it was with the president-elect or the current president or others, they asked, are we going to fund aid to Ukraine? Are we going to help Ukraine prevail? Because they see Ukraine prevailing as important in their own defense against CCP or Chinese Communist Party aggression toward them. The second takeaway is that their economy is doing really well, in contrast to the mainland Chinese economy. And as the number 2 and number 3 importers of soy and corn from Illinois, and a huge exporter of semiconductors, it's very important to the economy of Illinois and America.
Hey, Congressman Krishnamurti, we had our own Phil LeBeau down in Chile today, where China is a major player in the automotive industry and apparently has serious designs on the rest of the world. What should we do there? Do tariffs make sense in that case?
Yes, possibly. And actually, Mike and I actually wrote a joint letter to the administration talking about the issue of the oncoming onslaught of cheap imports from China in terms of potential electric vehicles and other cars that go far beyond the demand for those vehicles in China. And so this is going to be kind of a repeat of their other export model that they've used in the past, which is they export cheap stuff abroad, often under the cost of producing them, dumping them on economies and driving businesses out of entire industries. And we can't let that happen in the U.S. with Chinese car imports.
You agree with that too, Mike?
Yeah, I think what BYD in particular is doing in Europe right now should be instructive for us in America. And if we allow heavily subsidized BYD vehicles to flood the American market, it could be the death of major auto manufacturers. I also have concerns that our auto manufacturers might be forging partnerships with Chinese battery companies, thereby making us more dependent on critical components for our electric vehicles going forward. I don't think that was the intent of the Inflation Reduction Act, so I want us to be careful in terms of what we're doing to foster our domestic industry, but certainly BYD has designs on global dominance, and Europe's experience right now should be very instructive for the policies that we explore here in America.
Yep. This is a total aside, but I can't help myself, Congressman. There's a very depressing op-ed piece from Dan Henninger in the Journal today talking about the current state of politics. Did you see it already, Mike? You're smiling. I guess you probably did. But I'll just read part of it. I believe the public has come to regard Washington as a shapeless blur. People don't know what's going on there anymore. Some of Congress's most talented young members have quit in frustration, including Wisconsin Rep. Mike Gallagher. Yeah?
Well, if I'm one of the most talented, that is surely a
We're in
sign of
trouble.
how far Congress has
We're in
fallen.
trouble.
It's a bit like being the best player on the Chicago Bears.
Ooh,
It's a
hold on a
distinction
second. I
without
thought
a
this was
difference, but,
bipartisan. Hold on a second. I'm a little concerned.
There's no question that the dysfunction is frustrating, in particular the broken budget process and the way in which it seems to me we continue to outsource all of our power to the executive branch. That being said, on a hopeful note, what Raja and I have done together on the Select Committee on China, my work on the Armed Services Committee, it's been profoundly bipartisan. It's been very productive. We've made meaningful progress. It doesn't get headlines because we're not bomb throwers. We're not out there trying to get clicks on social media. But that stuff still happens, and that next generation of leaders in Congress does give me hope.
Have you tried to talk him out of it, Congressman Krishnamurthy? Has he confided in you on what was really behind? He was. I mean, you heard people talking about him as a president someday. That you don't want to do that to Congressman Gallagher?
I tried to talk him out of it. He said the only way that he would stay is if I became a Green Bay Packers fan, and that was kind of a red line for me, Joe. I'm sorry, but in all seriousness, Mike's retirement is going to be a huge loss for Congress. He's exactly the type of Republican that we Democrats can do business with, and we do every single day. And under his leadership on this committee, we've really kind of charted a bipartisan and serious and thoughtful course with regard to the competition with the Chinese Communist Party. So he's done he's done yeoman's work in that regard.
But in all seriousness, Congressman Gallagher, we united, we stand, divided, we fall. This is a difficult position domestically, just writ large, our political situation right now with the election, and we've got China just waiting in the wings to. I mean, I don't know what their designs are, 5, 10, 15 years from now, but we've got to do better. Wouldn't you say that?
Yeah, I would go further and say that the Chinese Communist Party, at least it's clear to me after a year of working on this with Raja, is actively trying to divide us. Their strategy is to pit Americans against Americans and stoke internal tensions so that we destroy ourselves, and they don't have to contest our primacy in the Indo-Pacific because we'll be too internally divided. And so all the more reason why I think serious, sober members of Congress and the executive branch need to come together, cut out all the BS, and do the work that needs to be done right now to prevent a war in the near term and win this competition over the long term. We're just not attacking this with the requisite sense of urgency. As for the presidency, I don't think I'm old enough to run for president, at least by modern standards, and so I'll have to delay that ambition until I'm in my 80s, it seems like, but we need better leadership from the executive branch going forward. But again, here in Congress, there is a lot of bipartisan work being done. It just doesn't get the headlines that a lot of the nonsense does.
Raja, when you were there, did any of the leaders in Taiwan intimate to you how long they thought things? I mean, how many years do we have? Do we have years before China decides to bring it back into the, however you want to characterize it, and however they do it, but that's their design on Taiwan. How much time do they feel we have?
I think there's a real sense of urgency there, Joe. As you know, Xi Jinping has said by 2027, he has commanded the People's Liberation Army to be prepared to successfully invade Taiwan. So by that timeline, the Taiwanese want to make sure that they have what it takes to deter any aggression, at least by that time, if not earlier. And that's why our trip really revealed that although they've made a lot of progress, we still have a long ways to go, and we in the United States need to do our part. At the end of the day, I think Republicans and Democrats, independents, if you look at the polling, they say, we want to win the competition. We got to avert war. We have to avert open hostilities and prevent aggression by the CCP.
All right, gentlemen, thanks. Did you sit next? I mean, 15 hours. Were you like sitting there? Do Republicans fly in the front of the plane, Mike, and do the Democrats have their way? How does that work?
We fly in coach, and the Democrats are in first class. That's very ironic, given the messaging.
That's exactly what I.
This is disinformation.
These are alternate facts. Yeah, fake news. Okay, gentlemen, I want to thank you both. We'll see you later. Good luck.
All right, when we come back this morning, we've got breaking PCE inflation data. That comes at 8:30 Eastern time. Very key number for the Fed. That's why the markets are going to be watching so closely. But next, the chief investment officer at Bitwise will join us on the record interest that he's seeing in his ETF as crypto prices surge. Crypto-related stocks seeing some pretty sizable moves in the last few days. Here's how they're trading this morning. Stay tuned. You're watching Squawk Box, and this is CNBC.
Or download the app.
Welcome back to Squawk Box. Bitcoin this morning trading just at about 63,000 almost. $62,808 has now jumped 50% since the start of the year and is nearing its all-time high, with much of that action driven by heavy interest in new spot Bitcoin ETFs. Next guest helps run one of them. I want to bring in Bitwise Chief Investment Officer Matt Hogan. Good morning to you. When you look at what's been driving this price action on Bitcoin, Matt, how much of this is retail investors investing directly in Bitcoin? How much of it is the ETF? How much of it is institutions in the ETF?
Absolutely. It's a great question. We're seeing enormous demand for the Bitwise Bitcoin ETF and across all of these ETFs. And the answer is it's all of those categories. You're seeing retail investors come into these ETFs. You're seeing hedge funds, you're seeing RIAs or independent financial advisors. I think there's an even bigger wave coming in a few months as we start to see the major wirehouses turn on. But this has been Bitcoin's IPO moment. It's in a new era of price discovery, and I think prices could go substantially higher from here.
Let's talk about where they could go in just a minute, but I just want to go back to this idea of who you think is buying these ETFs, meaning how much of this is retail versus institutions?
Yeah, absolutely. You know, when these ETFs first launch, they're not turned on at the major wirehouses, at the major institutions. So the initial demand out of the gate for any ETF, including these, is primarily retail and independent financial advisors and hedge funds. So I think that's the primary driver. That's what we're seeing. Right. But I'll tell you, after this meeting, I'm getting on a plane to go talk to one of the largest institutional consultants in the US about this ETF. So we're going to see that next wave of institutional capital.
You did mention hedge funds, which I will put in sort of an institutional or professional category. In terms of this big move, do you think it's that money that's pushed this, or do you think it's straight retail?
Oh, I think it's both. I think it's both. It's just new demand. If you think about Bitcoin pre the ETFs, there was only a small set of investors who could buy it. Now almost everyone can buy it, and the supply-demand dynamic is just off the hook. There are 30,000 Bitcoin purchased by ETFs this week alone. Bitcoin miners have only created less than 3,000. That's what's driving the price. And it's both hedge funds and retail and that advisor community.
Obviously, you have one of these, so if you say it's going to go up, people will say you're talking your book. But if you were to say it's going to go up, where do you think it's going to go?
Absolutely.
And describe exactly why.
Yeah, sure. At the start of this year, in December, we actually published our 2024 predictions, and we said that Bitcoin would trade to new all-time highs above $80,000 a coin. Based on what we're seeing in our ETF and these other ETFs, I think we have to revise that upwards. It could be 100,000, it could be 200,000, it could be higher than that. There's simply this massive supply-demand dynamic going on, net new demand, and a fixed supply, and actually a reduction in new supply coming up in April with the halvening. Sometimes investing is complex, sometimes it's easy. With Bitcoin right now, it's just about supply demand, and there's too much demand and not enough supply.
When you think about the various ETFs, spot ETFs that are out there, we're talking about a dozen right now. There's been a big question mark about whether that turns into 3 or 4, meaning there's massive consolidation, or they all remain independent, or new players emerge in the field. How do you see it?
You know, I think there'll be 6 or 7 or 8 of these that survive long term. There are 5 that are over $1 billion. We're proud that BITB is among that. We're at about $1.5 billion. So there'll be some consolidation. But make no mistake, these are the most successful ETF launches of all time by a large factor. Our ETF, which is, again, $1.5 billion, is one of the 25 fastest growing ETFs of all time. So there'll be 6 or 7, maybe 8 of these. And then there'll be variations. You'll start to see the ETF ingenuity machine come up with covered call options and other variations on the theme. But this is a big market. I think this is a $100 billion plus category. There's enough room for multiple high quality firms to play in it.
And real quick, do you expect to be offering the Bitwise, Ethereum ETF anytime soon?
Yeah, we think the door is opening to more crypto ETFs. Bitcoin ETFs have proven it's a low-cost, secure way to access the market. We're getting enormous positive feedback about BITB, and we want to be a player in every crypto category for ETFs. So we're looking aggressively at the Ethereum space. I think there's a good chance we'll see one by the end of this year.
Okay. Matt, nice to see you. Really appreciate it. Thanks for coming on this morning.
Thanks for having me.
Yeah.
All right, coming up, a new look at the Fed's preferred inflation gauge, and later, hedge fund manager Carl Bass sounds off on the Biden administration's new bid to keep Americans' data away from foreign rivals like China. He was a handsome young man way back then. Squawk Box will be right back.
Tonight on CNBC is the premiere of our new documentary, Big Shot, The Ozempic Revolution. Make sure to tune in at 10 p.m. Eastern Time tonight and Pacific. In this sneak peek, Melissa Lee takes a look at how easy it is to get access to alternative versions of popular weight loss drugs that are cheaper but are not FDA approved.
Our team wanted to see how easy it would be to get compounded semaglutide, so we put it to the test. We picked telehealth sites that didn't require any blood work. We used our real names and real body stats. By these metrics, none of us should have qualified for GLP-1 medications. On one site, all I had to do was input some basic info, like my height, weight, and set up a call with a doctor.
No, I've never tried this before.
After a 7-minute consult,
I'm qualified. Okay, 5 questions and that's it.
I was approved.
Great.
Of the 8 sites we reached out to, 2 approved us to take compounded semaglutide. None of us saw a doctor in person. Compounded semaglutide is currently allowed by the FDA, but it's not approved, and that's an important difference. There are dozens of pharmacies across the country mixing their own versions, sometimes adding other ingredients like B12. And while some of the facilities are inspected by the FDA, the drugs they make are not.
Wow. Melissa Lee joins us right now for more with this. And Melissa, this is the worst case scenario that a lot of doctors and drug companies have told us isn't happening.
This is absolutely happening. The shortages across the country with the actual brand name drugs, plus the high cost of the drug, plus limited insurance coverage, driving people to find other ways of getting it. And telehealth is the easiest way. You go online, and literally, it took 5 questions, 7 minutes, and 1 week to get that compounded semaglutide in the mail.
How much did it cost?
$149.
Is the assumption that you're talking to a real doctor?
It is a real doctor. I don't know what kind of doctor this person is. The doctor's never seen me. I didn't see the doctor
PhD
either.
in education?
I didn't see the doctor. This is a Zoom video call,
yeah.
and the person had a, like the generic sort of head where you can't, you don't see the face.
Generic, no pun intended, right?
Yeah. Exactly. The problem is, when I asked the doctor, is it the same? He said, yes, it's the same. It is not. These drugs are not the same.
And you're injecting it.
And you're injecting it into your body.
Not sure what it is, but
these drugs are manufactured exclusively by Eli Lilly and Novo Nordisk. They are in shortage. So these compounding pharmacies, there's no way for them to get the molecules.
And this is basically the equivalent of the pill mills where you saw the opioid pills being prescribed by doctors too. You're going to find the same scenario.
It's the same in that you have a lot of people out there specifically looking for one kind of medication. And in that sense, it is the same.
Did you come up with Big Shot?
I did.
Did you?
She's a big shot herself.
She is, but that's a good name for this. That's a really good name. You came up with it. You swear?
I did.
All by yourself.
I was inspired by various things.
Okay.
It's excellent. Melissa, thank you. And by the way, folks, make sure you tune in tonight. This documentary premieres tonight on CNBC, 10 p.m. Eastern Time and Pacific. Make sure you check it out.
Coming up, some breaking inflation data, the latest PCE numbers next when Squawk Box returns after this.
asset.com.
All right, it's the moment we've been waiting for all morning. We are just a few seconds away from some new PCE inflation data, personal income and spending numbers, and initial jobless claims. It's the PCE number that's the biggie, though. That's the one the market's waiting for because that's the one the Fed watches so closely. Ahead of that, we've been watching the futures, and the Dow has been in the red all morning long, along with the other major averages. Dow, right now, down by 140, NASDAQ off by 44, the S&P off by 14. Rick Santelli is standing by at the CME in Chicago. Rick, take it away.
Yes, well, jobless claims, 215,000, higher than expected. 215,000 is the loftiest level going back to the beginning of February. On continuing claims, 1,905,000, and we finally crossed over 1.9 million. That's the highest read since the third week in November. Now the money numbers, personal income for January, up 1%, up 1%. And you know what's fascinating here? Last January, guess what? We started out up 1%. And last January, that was the highest level going all the way back to July of 21. So we're equaling January. This number, once again, could take you back to July of 21. That is a whopper of a spending jump, or income jump, excuse me. On spending, up 0.2, exactly as expected. Real spending goes negative when adjusted for inflation. That's down 0.1%, and down 0.1% equals what we had in August of last year. To find a lower number, you have to go to March of 2023. Now, let's get into it. The deflator, personal consumption deflator, month over month, up 0.3%, exactly as expected. In the rearview mirror, 0.2 becomes 0.1. Now, on the 310 side, that's the highest level since September of last year, something to pay attention to. Now, let's go back to the deflator, but this time the core, okay? And let's go, let's go year over year on the deflator, and that's going to be up 2.4%, exactly as expected. 2.6 in the rear view mirror, so making very good progress. This is the lowest level since February of 21. Now, month over month, core deflator up 0.4%, exactly as expected. And 0.4%, though, follows up 0.1%. So up 0.4% is the warmest number, going all the way back to January of last year. If you round it to half, if you round it to 0.36 up to 4%, that would be February of last year, because we take these things out a couple of digits. And finally, year over year core deflator, in my opinion, one of the more important numbers, 2.8 last, what we expected, 2.9 last time, so we've made progress. Now here's something interesting. This is my favorite calculation. This is now the 12th consecutive month that this has moved lower than the previous month, and that is indeed a very good thing, of course. Now, 2.8% is good, but consider this. Pre-COVID in March of 2020, this was 1.5%, just to give some context. Now, what have yields done? They've dropped precipitously here from basically 430 all the way down to 427. No, I'm being a bit facetious. We've dropped 3 basis points, but it is something to consider why we've dropped 3 basis points. And I think the real spending numbers being on the weak side might have contributed to that. We see that the pre-opening equities, the Dow Jones, has indeed moved up. And that's something to pay attention to here as well. It's getting close to, at least on the future side, positive territory. Now, I know that was a lot, Becky, but we want to take it step by step because these numbers are that important. Back to you.
That chart looks unbelievable. Look at that chart. That's a precipitous drop right there, Santelli, isn't it? Look at that. It's off a cliff.
The XY,
2 basis points.
yeah, 3.
But on stock charts, you...
Depends on how you're looking. We did see, though, Rick, the other thing we watched was the futures, which have been under pretty significant pressure. The equity futures actually showed quite a bit of improvement pretty quickly. Right before this number, we were looking at the Dow down by 140. Yeah, there you see the improvement for it. Maybe just show me a futures board because, again, XY ratios on some of these things, axis and everything's on some of this really changed things up a bit. Rick, stay with us. For more on this new data, we want to bring in Joe Lavorgna. There are the futures. Dow futures now down by 34, so pretty massive improvement, more than 100 basis points. NASDAQ was in negative territory. Now it's up by 50. The S&P futures now up by 5. Joe Lavorgna's here, SMBC Nikko Securities, U.S. chief economist, and of course, former White House National Economic Council chief economist. Ben Harris, Brookings Economics Policy Director and former Assistant Secretary for Economic Policy at the Treasury Department, and our very own senior economics reporter, Steve Leisman. Steve, let's go to you first. Dig through what you think some of the most important things are here.
Real quickly on the PCE number, you have this still goods deflation. Goods were down 0.2, services up 0.6. And so this contradiction in the economy still goes on. You did have a surge in food prices up 0.5%. I think we do need to give a tip to economists who seem to do at least one thing well, which is their ability to take the CPI number and the PPI number and translate that into a very good forecast for the PCE. So they seem to have nailed that. I was always more interested going into this number because I thought that the market had probably already knew what this number was or had a good forecast for it, probably priced it in. The income and spending numbers, it's very interesting to me that income was up 1% and spending was up only 0.2%. Savings rate was up just a little bit, but it was an interesting time where maybe you could tell a story here that consumers seem to have decided to take a break, replenish their savings a little bit. They seem to have had a pretty robust holiday spending season. And so January was a pause. And I guess the question becomes for the market, is it a pause that refreshes or a pause that is the leading edge of perhaps slower consumer spending? Can't know that, but it is interesting. Income's very healthy. I'll look into the sources of that income in just a second here. But the spending was much more muted, and that went along with our CNBC NRF retail indicator, the census retail data, which showed that spending did take a break in January. I'll leave it there, guys.
Okay, Joe, you're here on set, so let's walk through. Steve's right, and Rick's right to point out that's very strong income number that came up 1%. Yeah. Is that good news to you? It shows that things are happening, or is it a sign of concern for potential?
I still think it's concern because the income number is based largely on the payroll data. The payroll data were strong, and I've got real problems with the payroll data. Number one, the tax receipt numbers suggest the net birth death adjustments that they use to inflate the numbers are overstated. Number two, if we look at small businesses, their hiring plans, there is now a major gap between the net birth adjustments that the BLS is assuming, which, by the way, accounted for almost 60% of last year's job growth. There's this big gap. If that's the case, Becky, you will see income over time be revised down. It's a much different picture. On March 28th, we get the revision to, or the data on the gross domestic income for the fourth quarter. That number has been significantly weaker than GDP. And in July, we'll get the annual benchmark revision. My guess is as we get to March and then into July, we're going to find an economy that is a lot weaker than people think. And I would argue this is very consistent with consumer sentiment, which, while it is up sharply from its low, is still consistent with recession.
Ben, you have any thoughts on that? Because the consumer has been the strength. To see income rise that sharply and see spending down, that would be the concern. If the consumer gives out, that's the thing that would really push things over the edge.
Yeah, exactly. I mean, that's the key thing to watch is the strength of the U.S. consumer. U.S. consumption has driven a fairly robust recovery. We've had 6 straight quarters of positive growth driven by consumption. I mean, my take is that it's being driven by 2 things. One is a red-hot labor market and rising real wages, which has put money immediately in people's pockets to continue spending, and they have. And the second has been, and this is a little underappreciated, we've experienced a wealth boom in this country. The S&P is up 20% over the last year. The flip side to rising housing prices is higher housing wealth. That's a good news for homeowners. So I think the U.S. consumer, my take is the U.S. consumer will likely continue the robust spending that we've seen over the past couple of years.
Okay, so you and Joe don't agree on this. You don't think that you're going to see some sort of turn when the revisions come?
I mean, look, I agree with the blue chip forecast where we're looking at around 2% growth for Q1. Atlanta Fed now is slightly higher, around 3%. until you show me consistent patterns of U.S. consumers slowing down, I'm just going to look to the recent historical trends.
Steve, what do you think just about the strength of the consumer right now?
I kind of agree that I wouldn't jump off of this number and say now is the time to sort of give up the idea that the consumer is going to remain strong here. Always listen to Joe Livornia and his outlook there. If indeed employment is weaker than we believe, then that's a reason to be concerned. I will point out, and I wonder what Joe thinks of this, I have wages up a very healthy 0.4% in this report here, which to me has been the thing that many economists have, I think, overlooked, in the idea that people have thought all of the spending came from that stimulus that was out there. I tended to think that at least a good chunk of it has come from the idea that wages have been decent and employment has been relatively strong. So long as that remains, I would be upbeat on the consumer.
Yeah, I mean, look, on the real wage side, it's only been very recently that the wages have turned positive, and there's been tremendous government support programs that have helped basically stabilize income. The problem, as you know, Steve, with all of this is that income and consumption are measures of current activity. They don't tell us where we're going. So the claims numbers and the continuing claims, staffing plans, temp employment, those tend to be leading indicators. The factory work week, all those metrics have basically been in a sharp downtrend. Now, we've not seen a pullback in broader activity as measured by GDP. However, if the labor market isn't as healthy as we think, and over time we realize that, what that means is the longer we run tight monetary policy, the longer we have an inverted yield curve, the longer that bank lending standards are tightening, the more at risk we are of a pullback in spending and a downturn in the economy. So even though we might appear to be healthy now, that never tells us where we're going to be in 2, 3, 4, 5 quarters.
Folks, we've got to leave it here, but we want to thank you for joining us and wrapping up all this data. Joe, Ben, Rick, and Steve. Also a programming note for you folks. Coming up tomorrow at 8:30 a.m. Eastern Time, we do have Richmond Fed President Tom Barkin joining us on set for an exclusive conversation.
That's pretty cool. That's good. Shares of Chemworth are plunging. The company placed 3 executives on administrative leave, including the CEO and CFO. It is conducting an internal review of accounting practices. As a result, it's delaying its fourth quarter earnings report. Nothing puts a chill on a stock price quicker than that, down 36% today. Coming up, should U.S. car companies fear Chinese imports? After a break, we'll get Hannon Capital's Kyle Bass to weigh in on that and other recent China headlines. Stay tuned. You're watching Squawk Box on CNBC.
tickets.
This morning, President Biden says he's directing the Secretary of Commerce to investigate tech-enabled vehicles from countries of concern, including China. Biden says such connected cars could collect sensitive personal and infrastructure-related data, send it back to China. This comes just one day after Biden issued an executive order aimed at protecting Americans' personal information that data brokers may sell to China and other countries. Joining us now to talk about all this, Kyle Bass, Haven Capital founder and CIO. And none of this is surprising, I guess, is it, after all your previous appearances?
It's taken a long time, but you know, even Xi Jinping bans Teslas from the cities that he travels to in China because he's afraid of Teslas surveilling him. So whether it's the guilty conscience or the fact that all of these connected cars can transmit data, I think it looks like we're going to enter into some reciprocal action, which is what I'm a huge proponent of.
After all the appearances you've had, I don't think we've ever talked about dumping and just the way China approaches global trade. And now it's going to happen, or there's no reason it's not going to happen with these vehicles, the BYD vehicles. We had Phil LeBeau down in Chile. So that's another thing we have to worry. They don't do anything in our interests, do they, China?
Their goal is global primacy at all costs.
Are you sure? So you just say that. That's true.
For sure. But look back to our tariffs, and I know these are Trump tariffs, but they're still here in the Biden era. The 232 tariffs on steel and aluminum. When China wants to act, let's say, uneconomically or non-economically, they can produce things and give away electricity or give away materials and then flood our market, ruin our capacity to produce, and then we rely on them for production once they ruin our capacity. So those tariffs were defensive tariffs, and they stayed on for a reason. I know in the beginning they said, well, Trump this and Trump that. The tariffs were driven by Bob Lighthizer and some really smart people, and they stay in place. The 232 tariffs, the 301 tariffs, they're all still there, and they're there for a reason. And the cars are just another iteration of they could dump their cars into our market and put our big three out of business. If they want to act, they could sell cars at a loss if they had to for a few years, because we run economically and they can run, a state actor can run without economics in mind.
This is the way they build real estate and stadiums and everything else. They can do all those things, right? It's because it's non-economic. It's done for a reason.
What do you make of the idea that we were talking with Froman earlier about just competition in the U.S. and we were making the argument about this is about cars, bringing cars into our country. You know, Elon Musk will tell you that BYD cars are pretty great. I don't know if you think that's true or not, but one of the reasons I think that some people have a view that EVs are not having as big a take-up as you might imagine is that the product itself is not that great.
Yeah, I mean, look, I own 2 Teslas. I bought them early, and they're just, for me, they're not my day-to-day driver, because if I need to go 2 or 3 cities away, I don't want to worry myself about where the next charger is. And when even in Palo Alto, where I had one, you know, you have to sit at the shopping center in Palo Alto for half an hour, and you have to wait in line for a charger.
Right.
Like, it's not like going to the gas station for 2 minutes and filling up and leaving. So, like, there are only specific use cases that work. And if you're just driving in a short distance and plugging it home, I get it. But it can't be your daily driver, and especially in places that have more rural areas. So
do you think that the whole EV thing is just a fallacy?
What? Say again?
That the market for EVs, over call it even the next 10 years, is a fallacy, because you will never get. It is unlikely that you're going to get the battery to really extend over the next 10 years in a way that may solve the problem you're talking about.
Correct. I mean, you know, in my case, the stated mileage would say 232 on a full charge. I could get about 100 miles.
Really?
So that was early. Now they've gotten better since then, but I won't buy another one. I won't buy another one probably as long as I live. So
really?
Yeah, because like I drive an hour and a half, 2 hours, and to a ranch or to a property. We have 8 properties around the state in our business. Like, no way am I going to drive an electric vehicle to do that. So I just can't do it.
I was going to, one question would be, when's the last time China did something that seemed nice or conciliatory towards the United States? I don't think you could come up with anything, so I'm not going to ask you that. Andrew, this is in the journal once again, but it's the former science editor of the New York Times.
Okay.
Who's saying that not only do documents now show that the virus, COVID, came from the lab, but it was, I don't know how this is new, but the laboratory actually developed the virus. I guess they're implying that it wasn't just a complete fluke or accidental, but it was part of the gain of function research to test these things. Now, it's still a leap to say that it was released on purpose and sent to the rest of the world on purpose, but are we ever headed there?
Look, okay, I'll give you a theory I have. It's really simple. At the peak of Hong Kong's protests, at the peak of the Chinese Communist Party's existential threat to their relationship with Hong Kong and protesters, they couldn't just roll tanks in there like they did in Tiananmen Square because Hong Kong was hugely connected. So we would see everything on video and audio and, and at that peak, at the same time China's current account, their kind of net income account was headed towards zero because they were traveling, they had 450,000 students here. They were traveling and spending abroad, and all of that traveling and spending is in dollars. Their current account was headed towards zero. Their Hong Kong protests were at a peak, at a zenith, and magically COVID showed up. And what did it do? It allowed them to take over Hong Kong without a shot fired. And their current account went up $450 billion overnight. Now, maybe it was just a pure coincidence. Maybe it was great luck on the Communist Party's part. Maybe it was not. I don't know. No one will ever know, right? We'll never know. But if you look at the emails between Fauci and Collins, which you look at them under FOIA, it's obvious that there was a cover-up that went on where we didn't want to blame them right away. We didn't even want to entertain the thought that
not after the NIH.
So I think the fact that we didn't want to even have it as a possibility was wrong. But as we sit here across this table, no one's ever going to know. But they didn't act as a responsible global actor.
So domestic airlines were shut.
We all know what they did.
Domestic airlines were shut down in China, but global airlines continued to fly out of China
for another 3 weeks, right? They ceased travel domestically from Wuhan throughout China, and yet international flights took off for another 3 weeks. I mean, that's a fact. That's super interesting.
This is the kind of stuff that on the old Twitter you would be. This would have never happened, right? This would have been like a forest falling in the tree, and not right.
I mean, there's so many things that are fairly obvious that are just facts, and then we're never going to know if the virus was released.
So whatever would have indicated that is gone, destroyed.
Yeah.
Well, so the bottom line is they're inexorably headed to try for global hegemony, and we need to do something. I bet we're not doing what we need to do.
Well, when you look at their economy, right, they're experiencing a real estate collapse.
No way that we just sell to their consumers and they sell to ours and we're all happy. I thought she said that there's enough room in the globe for two superpowers. Didn't he say that?
I don't understand how countries with diametrically opposed value systems can engage in, let's say, meaningful interaction for any long period of time. It's not going to work.
Well, and you got a lot of S&P 500 companies to talk to then, Kyle.
Well, a lot of them have been acting as aggressively as they can to move supply chains, and many of them will be caught with some assets there in China if things really go south. If China does invade Taiwan, we see these daily incursions getting closer and closer and closer to the shores, and the air defense zones get intruded every day. So if and when that happens, Joe, there'll be people that lose money. It's okay. You've had ample warning. The writing's been on the Great Wall for many years, and it's really intensified in the last few years.
So, writing on the Great Wall.
It's fairly obvious what's coming.
Kyle, thanks.
Thank you.
Good to have you in studio.
Coming up on the other side of this, maybe we'll try some hot sauce, but we're also going to talk markets and help get you ready for the final trading day of the month. Futures right now. Take a look at where things stand. We've moved higher now. Dow up about 55 points, and NASDAQ up about 110. The S&P 500 up about 17 points. You're watching Squawk Box, and this is CNBC.
Welcome back, everybody. Joining us to talk markets as we make our way toward the opening bell is Catherine Kaminsky. She is Chief Research Strategist and Portfolio Manager at Alpha Simplex. Catherine, let's talk what we heard today, because the markets turned, the futures markets turned around based on all of that data, the PCE coming in line with expectations, a lot of other moving pieces there too. Was there anything you heard today that made you feel better about the markets?
Well, I think the reason people are feeling better is because today it's business as usual. Things were in line with consensus. I think the market was looking for either an upside or downside surprise. An upside surprise would make people more nervous, but a downside surprise would have been a positive sign for rate cuts sooner. So I think it's really sort of a little bit of a no-op today, which surprised me, I think, in some sense.
Why? What were you expecting?
Well, we were expecting a little bit, possibly a positive surprise in PCE, something that has been consistent with a little bit of more sticky data that we've been seeing in January. So I think we're going to have to keep looking at the rest of the data this week. But really, the reason the market's happy about this is there's no bad news. It's really just we have to wait longer, which we already knew. So I think that's sort of the take I have today on today's market and why we're seeing some relief.
Heading into this, you already had the idea that fixed income, that'd be a place that you'd be shorting over the short term?
Yes, so I think fixed income really got ahead of itself. The market got a little ahead of the Fed, and we saw yields go down really drastically at the beginning of the year. And that has really reverted. You've seen a lot of short pressure and short signals, particularly on the short end of the curve, so short-term bonds. And that's something that suggests that really we have a lot longer to wait for cuts. But what's amazing is the equity market seems unfazed by this move. So we'll have to see. That's why today's data was interesting. Would it reconnect again?
Excellent. Catherine, I want to thank you for your time today. Catherine Kaminsky. Before we go, we're going to a very quick check on the markets. You can see that the futures turned around pretty drastically. We've been looking at the Dow futures off by about 140. Now they're indicated up by about 50. S&P futures turned to positive territory too, up by 15 points, and then the NASDAQ up by almost 100 points. Folks, that does it for us today. Make sure you join us tomorrow. We'll be right back here. Right now it's time for Squawk on the Street.
Thursday morning. Welcome to Squawk on the Street. I'm David Faber with Jim Cramer. We're live from Post 9 at the New York Stock Exchange. Carl is on assignment. Let's give you a look at futures. You just heard Becky say it, so you really don't need to hear me say it again. So I won't. Just look. All right, let's get to our roadmap this morning. It starts with the Fed's preferred inflation gauge. January core PCE in line year over year, up 2.8%. On the tech front, we got Salesforce out with a beat in terms of its quarterly results. The stock's not doing much. Revenue forecast certainly concerning. We'll talk to Jim, obviously, a lot about that, and we'll talk a lot about Snowflake. That stock is down dramatically this morning, both on guidance and the news that its CEO, Frank Slootman, will be retiring.
Suboptimal.
Yeah, suboptimal. All right, let's start with the inflation data, sort of get that out of the way before we move on to a couple of those big stock stories this morning. What's your take on this PCE number?
Okay, look, an in line is cool. That's the way I look at it. I think that there were a lot of people who thought after the CPI, this one could be bad too. And when you look at the progression of the S&P futures, David, it really is incredible how negative people are underneath. I mean, when Frank was on, Frank Holland this morning, he saw the futures just sinking as if it was a foregone conclusion that the number would be too hot. Mm-hmm. We keep seeing that, which is, I think, one of the puts underneath the market is the actual negativity of the futures in the morning.
Interesting. And of course, to your point, there is that move up in the futures again, and we'll see. Oftentimes, we trade away whatever we were doing in the futures market very quickly when the market opens, but you see that big move up.
Right, it's the stigma of this market. There's a belief that it all has to end. I mean, that this whole NVIDIA-fueled rally, if you want to call it that, we'll talk about it most of the day, is really just about people saying, oh yeah, AI, I don't believe it. And by 9:35, they're like temporary believers. How about that? They borrow the belief. They're renters of bullishness. They're bull renters.
Bull Ranchers. Well, come on.
No, that was good.
Yeah,
I just thought of it.
I liked it, but
Okay, Jimmy's back.
We've also had a significant rally overall in the market,
Right.
And even
What
this
happened
year
here
now
with
in
Spike just
broader
like
broader
I'm saying,
market.
The S&P, and that was
Seeing
something
things, or
Frank
we just
showed
get a
around
big
50
pop in the
505.
SPY?
He said, if you look at the S&P, the weighted, as opposed to the one that gives all the pressure on the second,
The equal weighted, you
it's
mean.
now the equal weighted. It's
Yeah.
now good.
Yeah.
And I thought that was a very. I'm glad you saw that, because what that said is, stop it with the Mag 7, which is Mag 6, which is
Yeah.
Mag 5, and focus on the fact that Sherwin-Williams hit a high. I thought when we did that this morning, I said, yes. Let's just go back to the idea that there are individual companies like Home Depot.
God, what
that
happened here?
reported, forget all this stuff about how their forecast wasn't good. You got to get away from beat and raise. This was the first quarter I've decided to rebel against the terminology that the street uses.
Right. I mean, year to date, again, the Mag 7 is, as you see, they're up 13%. Really, it's not 7, though.
No one's complaining about Apple. It's 903, and no one
it has
said
been
that
pushed
Apple's lost
largely
its mojo.
by gains in NVIDIA. I want to talk more about Apple as we go along. Two interesting stories. Apple and also
Price
Alphabet,
index.
which we've been talking about as well, which I find fascinating
And
right
Commerce,
now.
I think you have to focus
Is
on.
as
Commerce,
expected.
Commerce.
Oh, Commerce.
Yeah.
I'm sorry.
Oh, no, Commerce is okay.
I thought you were talking
PCE.
maybe InBev, yeah.
InBev was good. No, we'll get to that. But when you see something like Commerce, you forget what's going on. It's a chemical company with
Shut up. Speak when you're spoken to, Kramer. It's vacation. Okay, well, that ruined all my plans. Damn it. It wasn't supposed to go that way. It was supposed to hold at the 1, 2, 3, and then Jimmy was going to take it on the foe. And the foe already happened. So it looks to me like we could continue. So if anybody has a long resistance, please put it in the room right now. Randy. Damn it. It wasn't supposed to work out like this. I had a strategic plan. Now I've got to change it. Maybe buy the dip on the IWM. Like Jimmy says. Magnificent 7. Snowflake.
Ramaswamy's come in. He did do great at Google. He took Google out from 1.5 billion to 100 billion. We like that. But David,
yes.
I don't know whether he's oriented towards sales, which is what Slootman is. He's a great salesperson for the company, or if he's not more of a data scientist. And you need sales.
Right. You had both Ramaswamy and Slootman on.
Yeah.
Let's listen to what they had to say when you talked about this transition from Slootman to Ramaswamy as CEO.
I mean, I don't want to be one of those quarterbacks who doesn't know how to get off the field. You know, I'm making room for bigger and greater talent.
Well, Frank is still going to be chairman on our board, and I'll be talking to him regularly. He's still a big fan of the company and all of us. We are all truly, truly grateful for what he has made Snowflake to be.
It is unexpected. Let's not fool around.
It's unexpected. I mean,
in the summer, he was telling people that somebody, don't worry, he's sticking around. He's a giant, okay? And everyone knows he's a giant. His book, by the way, co-written by him, is extraordinary about what's going to happen with data, very prescient. But David, you know, in the end, you can't have both a revenue guidance shortfall and an unexpected CEO departure of the CEO of a magnitude of Slootman and not expect this exact decline. It's a correct read.
But what is behind it? Again, it's slowing growth.
Some
It's not
people
as
say
though the
he's been
company
exercised all his options. He's been there for
no,
years.
not that. What's behind the slowing? What's behind
Change
the
of
guidance being below what many had anticipated, given what has been a very strong growth rate, which has, of course, brought a multiple to revenues, 18 or 20 times, whatever you want to call it, that obviously is quite high, but was justified by that growth rate, no longer is. What's going on?
Okay, the consumption model that they have is a good model. That's why you rent the cloud. That way you can find out whether you really want to invest
In very short amount of time?
They obviously want longer, but yes. But David, they were growing in the 30s, which is why people were willing to pay that 18 to 20 times sales.
And now they're
they're
not.
growing in the 20s.
Well, my question again is why?
Weakness
Do we
in
know?
the
Do you
consumption.
know why?
Okay, it's the demand weakness. Okay?
It's demand weakness.
Yeah, it's demand weakness.
All right, well, that doesn't sound
That's
good
why
to me.
you're trading down. Well, they're trading down to a cheaper product. No, Dave, that's not plus 46. It's minus 46.
I understand. I'm just trying to
so
understand.
It's I'm going to
the,
say it's
does the
23
demand weakness come from their inability to make sales somehow?
No, change the model.
Is
Yes, you could argue that it's inability. That there's a slowdown among. There's a slowdown, seasonal slowdown in demand. Okay, they called it seasonal. I did not expect that this was a season that would produce a slowdown.
Okay.
Plus, don't forget we have an extra day.
We have an extra day in this.
Which is today.
Yes, it is. Today is
Just point that out.
leap
But
day.
No, okay, 23 points of this was Sloopin leaving. I don't want to be joking about this. There's a lot of people on this stock. It's great growth stock. 23 points of Sloopin leaving, and 23 points, I think, were the change in the model to a product where the margins aren't as good.
So what happens now? How long are these guys in the so-called penalty box? How long is it going to be until... Or if we see a rebound in these shares, you had to get some sense that the growth rate's going to be above 22% for that next
Let me give you the
fiscal year.
bull case is Okta, which is, if you want to hit up OKTA, that's an identity company that was hacked. They were a cybersecurity company that was successfully hacked by bad guys, and this was the quarter where people chose to forget about it. Now, if you zoom in on that decline, you can see that things came back rather fast, and Todd McKinnon, one of my absolute favorite CEOs, actually was talking about how, he didn't say this in so many words, but they used their own hack to be able to tell a better story about what they can stop.
Right. Okta, obviously a strong performer.
Yes.
Yeah, so I know I would like to see a longer
Yeah,
chart.
I know.
You asked for it.
But, okay, so look, I'm going to give you one just based on that,
Okay.
because that's up 20. Just go by Zscaler, okay?
Jim?
The companion company.
Yeah.
And Zscaler
Damn it,
does
Jim.
identity.
Shut up. So we are approaching a shoulder line of a Head and Shoulders on the SPY at open. What I would suggest, if we break that resistance, we will double top today. Magnificent. Make sure you got your pencil and paper out. And I'll make it noteworthy. 509.75. Oh, you have 509.93? We're very close. Very close. What'd I say? 509.75. Let's say you're off a little bit, not much. I'm always right. We will have an end of the day review of this prediction. 509.75 will become support. We will close above 509.75. The bad thing about it is the 1, 2, 3 could have happened in, let's say, 17 minutes. And Jimmy would have been allowed to go ahead and take the 1, 2, 3 and run it up to the shoulder line and get out right at open. So my suggestion is WAIT, wait for the TREATS, treats. You ever had to say, like, I'm getting ready to go to the PARK. Honey, would you like to get ready to get into the CAR? Just in case BEPPE hears us and wants to go too. See, dogs, they don't know how to spell. Salesforce, they've had CRM in the news a lot here lately, and I don't appreciate it. They're pumping the heck out of it like they were LLY. I've just never traded it that much. Oh my God. See? RM. Woo! Man, what a beautiful chart. This is what makes me sick. Even 4 would have been great right at the bell. So they get a number right in their predictions, and the market goes static. Finally. As I've learned to watch the market, it kind of has a tendency of healing itself, no matter what they do. I think that's what's so neat about it. They're saying they're doing something to help the market, but they're not. Anybody ever make beer in here? Yes or no? We do have a dog lover in here. Has anybody ever made beer in here? No beer? Well, here's just a small portion of what I've done. That's 15 gallons of silver dollar porter that took first place at the Walnut Valley Festival Bluegrass Camp site. That beer right there has a story behind it. Let me show, in case people on the YouTube don't see it, I'll show it to you. There it is. That's 15 gallons of silver dollar porter. So I'm sitting in here in the garage making this out of all grain. And I did something to cut my finger, and it was right in the middle of the process where I had to do something. I forgot. Boiling. What was I doing? I was adding the grain to the water. And I cut my finger. Bad. So I had a napkin. And I wiped it up, and I kept wiping it up. I had to boil this for an hour, so I had to attend to this before I could attend to my finger. And I went into the kitchen and sat down on the, we still got time, sat down on the table in the kitchen, got my guitar and started writing a song called Boil Your Wart Right. Boil your wort right. So I wrote this song on a napkin, and then that same batch of beer, I get a phone call from a band called Still in the Hill out of Arkansas, and I gave this picture of them when I saw them at a concert, and they somehow they got a hold of the picture. I told them to, this guy that knew him, to give it to him, and they called me up and they said, "Man, Jim, we'd like to put this picture on our new CD that's coming out. It's perfect." So I cut my finger, I wrote a song, and then I got my picture put on a CD. And it turned out to take first place at the Walnut Valley Festival. Yep.
Which is a subsidiary of Dongfeng. Take a guess at how much it costs, guys.
$5.
$9,200 equivalent U.S. dollars.
God.
$9,200 equivalent U.S. dollars.
What?
Here's another example that you'll say, well, it's easy to see why somebody in Chile would buy a Chinese vehicle versus a traditional automaker that we see in the United States.
$9,000?
Compare the price of a Haval Julian, which is a base model crossover utility vehicle, with the Toyota Corolla Cross. It's a $6,000 difference in the base price there. And when we talk with buyers here at this auto mall, almost all of them say the same thing. The quality is good and the price is right.
Yeah, it is.
Because of the performance, and it's very cheap in comparison to other brands. So that's why I prefer this Chinese brand.
Oh my God.
Yes, I definitely prefer a Chinese car. I've traveled 500 kilometers, a lot of traveling, and it's very safe.
As you take a look at shares of BYD versus Tesla, and I know BYD is really the one Chinese automaker we talk about the most. Remember, Tesla still outsold BYD in terms of pure electric vehicles last year. Tesla selling 1.8 million, BYD selling 1.6, though this year it is expected that BYD is likely to pass Tesla in terms of sales. By the way, they've just begun selling both Teslas and BYDs down here in Chile. And while this is not the largest market, guys, what we're seeing in Chile, we're seeing in Australia, we're seeing in Israel, we're seeing in countries around the world. They're not the largest auto markets, but they are markets where the Chinese, because they continue to build and they need to use their capacity instead of shutting down assembly lines, they are exporting. And what you're seeing is more and more people saying,
well, they get them cars down to that price, man, they will sell them like hotcakes. Especially the way the cars, how expensive they are. A used car. I mean, it's outrageous. They get, I mean, I'd go 100% China. Without a blink of an eye. Notice the cars that are on the road where you live at and see how many are Hyundais or Kias or Nissans. I don't see. I tried to count the Fords and I couldn't hardly count enough to put on both my fists on the way home. Yeah, I said that. Man, I got some good coffee right here.
Phil, this report is unbelievable by you, and I want to point out that if I had to buy a Volvo here, many Americans would not know that's Chinese. So let's put yourself in the shoes of the president. You want to get the CPI down, but you're the union president. This would smash the union. We would buy Volvos because we wouldn't know the difference. This is a horrendous situation for someone who's trying to help the unions, isn't it?
It's going to be tough for them to figure out what they can do aside from trade restrictions. We heard Senator Josh Hawley out of Missouri say yesterday there need to be trade restrictions put in place if Chinese vehicles are built in Mexico. We're going to hear more and more about this in the years to come because you're not going to be able to bring down the prices much more than what we already see. And yes, there are efficiencies and a few other things that the big three are working on, as well as foreign automakers building in the U.S. But David, the bottom line is this: our costs cannot.
Let me tell you something, buddy. If I can get a brand new car for 20 grand, I'll do it. You hear me?
Phil, thank you. Obviously, we're going to hear from Phil throughout the day. Great reporting from Chile. We're going to take a quick break here. Don't go anywhere.
It doesn't take me too long to get into it with CNBC. The only reason I watch it is because of Becky and Sarah. The Sarah smirk reminds me of Elvis, and the Becky quick reminds me of a girl that I used to know. Just a little bit too quick. Did I go in there and make coffee? If not,
Oak.
make beer disappear in your mouse. That's a magic trick. Watch that in the video around the 760 area, according to Mike. Do you understand? I'm going to say watch the VWAP for the play off the spy. That's when I'll start taking business today. Jimmy doesn't appreciate this bounce just off of a number. When the PCE ever become into the core price index, huh? C.
Opening bell 4 minutes from
That's
now.
funny.
So you take a look at the potential S&P.
MSTR.
We'll get to Best Buy numbers and a lot of other earnings as well when we come right back.
Okay, we're getting ready. We got 3 more minutes. I'm going to go in there and warm up some water for a little bowl of oatmeal. We had a little bounce on Adobe. We should have breakouts on all your favorite stocks here at Open. Let me know what you like. It's very important that you do that. see Tesla bounce. The 204.23 is what I had as resistance. Red line resistance. Dead gummit. Everything was ruined. Stupid numbers. PCE. How dare you? Let's see what happens at open with Schwab. Crude oil up.
Schwab Bank Investor Checking. The checking account built.
Okay. We got 1, 2, 3 full on Tesla. An ascending triangle. Hey, Mike, pay attention. Number 4, you might get a little bit more. I know it's crazy, Jim. I don't know how you do it, but damn. Oh my God. It's got to break out here or it pulls automatically down here and fails. Okay, here we go. The crowd's going wild. Right now, Jim's watching. Jim doesn't know what to watch. So it's Tesla. Any kind of knife. Back to the 200. And that was a fast move. Put that in there. AMD pop. We got a 1, 2, 3 on Meta. Apple. Amazon pop. I'm going to clean up SPX. Should have had this already straightened out. Can't read that. Go to the 5-minute, 5-day, yay. So we have a flag, and we broke out of the flag. You see it? Tell me you don't see that flag. God, Jim, I see it. Draw it out for us in a way. Tried to tell you. Okay. Now where are we on here? Oh, God. We're nowhere to be found. This is disgusting. So 5:51:11:06, and on the 1 hour time frame, resistance is tweezer top at 5107.50. Okay, do you understand? Resistance to break 5107.50. I think we got something going on here. Right there. 5096.71. It's my story and I'm sticking to it. We could be seeing the first put coming into play. There it is. FSLR Solar. Oh, there goes my water. Okay. Oh, I've got 4 of these up? What the hell? Okay, I'll be in there in a second. Oh, God. He's not good under pressure. Can you imagine having some guy hanging over your shoulders? Ain't the dishes done yet? Finally. Okay. I heard you. I'll be in there in a second. So I ain't gonna stop until you come in here. Okay, I'll be right back. I have an issue. I know, I'm a nervous wreck. Nancy's not here today. We got into a big fight last night. I'm seeing support right here for the first one coming up just now. Just was triggered. Ladies and gentlemen, watch this. SPX. Turn into a hammer. See, you see the support right there? You got the wick, and the body. So that's three places. That's where I put that alert. I set that alert right there when we were here at the top. These were all bearish candles. You see all the wicks? That's telling you that it's getting bearish and that the buyers are leaving and turning into sellers for a little bit. I'm trying to figure out if we still have some more weakness coming. Now you got a big hammer come in. So you had 3 minutes to make a business decision. You had 1 minute, not even that. You didn't have very long at all to sell that. Once it hit that support line. So remember, when I'm using scalping, that body, and then you got these two wicks. And we landed right on it. I still think we'll find something here in a little bit. I thought about this a lot this morning. Damn thing screwed me all up. I was going to go big on the 1, 2, 3, and then that CPC whoever. You got a long leg doji spinning top right now on Tesla. So it's either pulled back support, which is at 204.23. I tried to set an alert off the 200, but not good enough. Not off too much, but so if it doesn't hold the 9, I think we're safe to say we could double bottom on this SPX and land on the 21 and use it the rest of the day as a support level. If it doesn't hold the 9 on the 1 minute. So there was my chance to buy the call and I didn't do it. I was going to, but la la la. 29th, end of month. I always like to trade the last day of the month. I'm watching the put, just in case it doesn't hold this. Here we go. Get ready. The 50-65s. The 50-65s. Can you give it to me for 175, please? Hey, Jack. Kind of keep this to everybody, but we're looking at the put here, the 50-65 lotto $2. It's important that we go ahead and pull on back and hit the 21. Would leave a higher low, then we'll get the call. Now we want a couple fools come in here and sell this and get scared. Magnificent. Would you like to sell them? Do it for me. What we got here on Mike? Oh. Did I call you a fool? No. If I insinuated that, I didn't mean to. It was a slip. Okay, we're at 225. You can make a business decision. I didn't know these microphones picked up everything. Irrational exuberance on a stupid CPI, whatever it is, PIC or whoever. PCE. Well, yesterday they were bad mouthing NVIDIA. Now look at it. That's what I thought. Okay, get ready, Tesla. Double bottom, higher low. It could probably hit the 200, so I'm waiting. I'm still waiting. 202.82 is tight. Jimmy will raise it up just a notch. So he won't have to say, damn it, Jimmy. Just a notch. 202.88. We're waiting for the SPX to hit the 21 and see what direction she shall go. We could go ahead and keep the higher low, so we will know. Bobo. I don't know if they want to give this up too easy, but they might. I'm just not totally agreeable yet. I think if we do break above 5092.74, we might see some good stuff. Jimmy just called out Tesla. Damn, Jimmy. Oh, look at AI. What happened here? Earnings. Anybody see that? That's what I thought. After seeing some of these stuff today, we might get a good little bounce and break resistance. I'm having a little bowl of oatmeal to fill my tummy. The crowd's going wild at the sports arena. I did make it perfectly clear to wait for the VWAP today if you're going to take a bullish trade on the SPY. If you wanted to go to the PARK. Oh, I forgot to listen.
But it remains to be seen if it's sustainable over the longer term.
All right, if the peanut stuff is doing so well for them, then should we be getting some appreciation for Smuckers? The other side of the J versus the PB? It seemed like the market wasn't quite as impressed with Smuckers earnings.
Yeah, so Smuckers is a little bit different story. Smuckers has gone through a series of M&A over the last year or so. It's sold off most of its pet foods business. It still competes in pet snacks, but the dog food business has been sold. And then they acquired Hostess last year as well. So they're trying to reposition their portfolio for stronger growth. Schmuckers, they have 1 quarter left in their fiscal year, and really the eyes right now are in fiscal year 25 for Schmucker. There's a lot of uncertainty in fiscal year 25. One of the reasons is, when they sold off that dog foods business, there's a lot of stranded overhead costs there, and so it's still unknown of how much stranded overhead there will be next year, and that could be a big earnings headwind. So we're expecting pretty low earnings growth in fiscal year 25, low single digit earnings growth, which is below.
Snow is down $45.
Target about high single digit EPS growth. But we're likely going to see low single digits EPS growth in 25, and that's one of the reasons why.
Oh my!
Okay, all right.
Help me.
Let's talk grocery stores. In particular, Kroger, the Albertsons deal. Elizabeth Warren this week saying she doesn't want it to happen. Does that limit the potential for this stock?
Yeah, so this has been clearly a distraction, not just for investors but for both companies, Kroger and Albertsons. I'm not surprised that this deal was blocked, but I think it
whatever it did, it hit my support levels.
Now that they're both going to have to fight it in court.
So I wonder, man,
there's
I missed this.
Dadgummit. In the complaint, that one is about.
I haven't charted this up.
But they also talked about some other issues in there, things like less competition for workers.
207
which is, kind of a strange or rare thing to include in these type of complaints. And it also seems like Kroger and Albertsons, that one of the ways they're trying to resolve this market consolidation issue is that
here's 175. Somebody got it right.
To a company called CNS Grocers.
Morgan Stanley.
And the FTC doesn't really like that. They don't.
That's
think
when we want to buy it.
Grocers is a viable grocery company. They don't have that much experience in the grocery business, and they're really worried that CNS Grocers could fail the grocery business, and then maybe have.
Morgan Stanley loaded up at 175. I'm not saying they did. But if they did, they got a good spot. And we're talking about snow. My grandpa Lickenteller used to tell me, Jim, don't piss in the wind. You might walk in yellow snow.
Understood. Stock price is pretty close to the 52-week highs. I mean, is it okay stock to own at this point, regardless of how this turns out, or do they really need this deal?
Google?
No, in our opinion, they don't really need this deal. You know, we wrote about this in the past, but we thought they'd be better off without acquiring a grocery store like Albertsons. But in terms of just the stock and the fundamentals, you know, it's one of the reasons we have a hold rating right now is because you know their comparable sales growth is significantly decelerating. Even in the latest quarter for Kroger, it was actually negative. And one of the reasons was because grocery prices, they're not necessarily coming down, but they're not rising to the same rate as they were in the past. And so there's a lot more pressure on grocery companies to grow traffic and volumes. And that's just hard to do in this environment because consumers are shopping around in different places. They're going to more low-price grocers. The company that's most benefiting
We're changing their diets.
because they are obviously known for the low-price groceries, and they're conveniently located to most consumers out there. So we really favor right now Walmart over other grocery companies.
All right. Hey, just real quick, Arun, for Target earnings next week. As a grocer, they've got a roll, but it seems like they've been a little overshadowed by Walmart and some of their other issues.
Yeah, so
other issues.
They're very small in the grocery business. It's about 20% of their sales.
What gives them?
About 60% of their sales. So that's clearly the reason why Walmart sales are growing faster than Target's.
How dare you?
For Target, you know, I think the big story is really when they can rebuild operating margins. Because they're a lot more exposed to discretionary categories, their operating margins have been all over the place the past few years. It can go up as high as 8 to 9% in some years, and it can go down below 4% in some years, just because given their exposure to these discretionary categories. And so I think the story on Target right now is really when can they grow operating margins. And I think a lot of that's going to come when the consumer discretionary spending environment improves, which I don't know if that will happen at least in the first half of this year. So that's why we have a hold rating on Target, and we prefer Walmart over Target.
All right. Thanks, Arun. Good stuff. Good setup for us to think about as we get ready for these earnings. Appreciate it as always. Good insight out there. Take on the companies. Tom, let's do some trading. Let's start with Target. What do you think going into next week?
Well, it's just below 9-month highs. It's had a pretty good run, up 6% so far, just over 6% so far in 2024. And it made some inroads in the last half of 2023 also. Arun did mention the discretionary spend on those higher priced items hasn't picked up as of late. They're doing some cost-cutting measures. Shrink's a big problem for them also. But they got earnings next week on the 5th, so that means that implied volatility levels are elevated at this point. IV percentile rank is about 68%, so above that 50% level, which means that we've got some event risk, right? So what does that mean? Option premium expands a little bit. So I've got a strategy that's neutral to bullish, but gives you a good cushion to the downside before you start getting hurt on a trade like this. I looked at a cash secured put here where I'm going to go out to the March 15th monthly cycle, so 15 days till expiration on this one. So just a 2-week trade, not a pure earnings play, so you have a little bit of duration in it. And I looked at just selling an out of the money put, the March 15th, the 148 strike put. You're collecting a credit of about $4 on that one. Maybe it's a little bit lower, closer to $3.80 at this point. But if you collect that $4 credit, that's what you can make on it, right? Your break even goes all the way down to
I'm feeling good
before you start getting hurt on this one. That's about 5.5%.
It really pisses me off. I had plans for today
that you're giving yourself. Now, on the flip side, you've got to be comfortable owning the shares at that break even, which is at 145 to the downside. So selling a cash secured put, if the stock moves higher, consolidates where it is post earnings, or even goes a little bit lower but remains above 148, then you get to keep that option premium or that credit that you collected, which is
I don't want to grudge into it and say, I'm going to buy a put.
Nearly 60% below the current share price. So if you want to buy the shares at a discount, this is a type of strategy that works for you. And even if you don't get to buy them, you get to keep that credit.
Okay, all right. Makes sense.
Yep, makes a lot of
how
sense.
About for Kroger in the midst of all this M&A drama?
Yeah, they've got earnings on the 7th, so FTC blocking this deal, nearly $25 billion. I'm not surprised by it. States were already coming out before the FTC came out with this ruling. Maybe it doesn't get through, but they've got earnings next week, so implied volatility levels are elevated in here also. So not a lot of option premium in Kroger. It's not a big volatile mover at this point. Option market's pricing in about a plus or minus maybe $1.75, $1.80 move either way in the share. So I looked at something that takes advantage of the dispersion between the implied volatility levels. So I went out to that same March 15th
Jimmy just got an
monthly
alert.
cycle, 15 days to expiration. And I'm going to buy an out of the money call,
No,
50 strike call.
SPX, he
and
did
buy
mention
an
the
out of money
21.
46 strike put. And then in the near term, March 8th weekly options that expire in 8 days, I'm going to sell those same strikes. Sell the 50 call.
I
sell the
agree.
46 put. So I'm creating a double calendar position where I've got some upside
I agree.
exposure, I've got downside exposure about that one standard deviation move that the option market's pricing in. I'm only paying.
I'm not going to do it until it breaks the
So
21.
there's not a lot of risk involved in here. But look at the range that I have here on the risk profile.
I could skip call maybe and look for a double
45
top.
on the downside and about 52 on the upside.
'Cause we're squeezing.
Where I can remain profitable on this type of strategy. Now, what's the implied volatility dispersion I
Tesla?
mentioned? Is that I'm buying basically about a 33% implied volatility in the March 15th option series. And I'm selling about a 40% in that March 8th weekly options that contain that earnings event. So that creates a lower priced lower risk entry point in this type of strategy.
Jimmy
But you need
White.
to move, Oliver, either up towards at or near 50 or down below at or near
Amazon
50.
175.14,
to remain profitable. on
new
this
high.
strategy.
All right, interesting. Got two
Flag on
up
Apple,
there that you could hit,
off the
but
200.
A wide range of outcomes for Kroger, and it kind of seems like that's the way to approach it right now with the good bit happening
Uh-oh.
For the stock. All right, thanks, Tom,
Uh-oh.
for the trades. Thanks, Arun Sundaram, for the analysis. When we come
Did you
back,
see
we've got
that?
some more tech. Looking at Zscaler next.
That's called
up
squeeze.
On the docket for earnings, we will trade it when we come back.
Jim, where's resistance? Right there. See the top of that candle? That body?
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim.
Go deeper with Thinkorswim. Oh, I was born a poor white man in Sacramento, California. And when I come out of my mom's womb, I was a bear. After many hormone shots, I discovered my pronoun. They called me a Washboardjim now, but it took many years of hormone treatments to change my sex appeal. Tesla is showing head and shoulders off the 200 SMA. Tesla. We just hit the 21 just now. Right there. Crowd's going wild here at the sports arena. AMD double topping, baby. AMD. AMD. Come to me. Praise me. Okie dokie. Back to the 21. We're going to find out. We're flagging. SPX puts on watch the 5065. And I thought about moving it and just grabbing less. Moving it to 5080. Or 75, 5075, yeah. Grab 2 at, if we don't hold this here support level. You can only come down here so many times. And the tighter it gets, okay, get ready. Come on, give me 320. 5075 puts. 320 maybe? No? Nope. Man, that'd have been a good trade. See how stupid I could be? $3.20, $3 to $4. Jimmy saw it coming. Yeah, that was sorry. I had it all ready for that. I'm going to go into the kitchen. I'm not sure if I have coffee. Oh gosh, 450. Okay. Oh no. That's it. I quit. 320 to 510. Mike. Paper trade. 330. 550. Go ahead. 610. Dadgum, you stupid moron. Oh. Jimmy said he was going to buy 2 more. He was going to buy. Oh my. It sucks. Oh. Shit, I knew it. Well, it was a paper trade. $7.10. God darn it. Yes, Jim, we're quite impressed with your paper trades. Bingo. Now calls might be good here. Watch calls here. In fact, look at them now. The 5100 at $3.30. My gosh, I got that. Nothing you can do about it. Oh. Well. Hold on. Ooh. No. This could drop all the way down here to the 200. Should have waited. I'll load up down here. If I get one more candle, I'll buy 4 of them. They'll give me 5. That's where I should have waited right there. 50.78. Go, baby.
that to the downside, that'll be perfect right at my short strike. I'm not looking for a 20% downside move because I don't want it to go through the 205 strike. Of course, my break even on the downside is 207.5. So I want it to be above 207.5, below 232.5, and the closer to 220, the better.
All right. Okay, nice. So looking for the market maker swing to the downside, basically, kind of picking a side here. Pretty clearly directional trade. Like it. Bold.
Yeah, just taking these recent earnings into account. I think it'll be similar. I don't see why they're any special or any different. I think Palo Alto is actually the best in class here. So
yeah,
I don't think there's any reason why they'll be any different.
Fair enough. All right. Like the trade, put it out there. Looking for some slippage in Zscaler. Thanks, Joe.
Thanks for having me.
All right, portfolio manager of the Rational Equity Armor Fund. All right, when we come back, we're going to get away from some of the intraday action and the earnings to talk about a really important subject in the world of healthcare. Team up between India-based Reddy Laboratories and Koya Therapeutics to attack neurodegenerative diseases, including the very insidious ALS. Don't miss it. I'm looking forward to this.
Break the 9. Right now I'm in SPX 5100 call at 3:30. Thought about grabbing a couple more, but I didn't. That's enough of that. You can easily drop down to the 200 too. That's what I'm worried about. If I just get out of it and wait. Or do we break the 9? If we do that, I get out. Break it. Snow, Walmart's down today, 1.37%. Boeing just took a new low. Workday, new low. Baidu, new low. Pawn, P-A-N-W, one to watch. Lilly, down $5, $5.50. Humana, Goldman Sachs is down. Coca-Cola and Kroger are both down, and Tesla.
Off and telling us about that partnership and where you guys are in particularly your neurodegenerative process right now.
I'm in SPX calls.
Sure.
We're even.
Thank you, Oliver, for having us on today. This is really an exciting opportunity for us to continue our evolution as a company. Just a real brief background for those who may not be familiar with Dr. Reddy's. We're celebrating our 40th anniversary as a company.
We break the 63.
A chemical company moved into
and turn the 21 back up to the upside.
novel therapeutics.
We could run this up
especially
to
with our partnership with
a little
Koya
under
Therapeutics.
5092.
Our goal and Dr. Reddy's
Yeah, I
goal when
said
he
it.
founded the company was to address unmet needs. And as we know, ALS is a
Or you make a business
neurodegenerative
decision, get out
disease
even.
that just doesn't have many alternatives to it. And with the combination of Koya's
And who are
product
you?
and our product, we believe that
Dr.
this
Redding?
could be a novel therapy.
Tell us about the product, Howard, that you guys are working on. I think insidious is the word that often gets associated with ALS. It's mystified scientists for a long time. And in the category generally, if we think about investors with big healthcare themes,
I'll be back.
neurodegenerative diseases is certainly
Right now we
a
want to
huge
break to
category.
63.
Why the pair up from your guys' perspective?
That's the red line.
Great, thank you. I would say the most important thing to realize is this is a combination
Blake
biologic,
it.
meaning that it is a combination of two different drugs, low-dose interleukin-2, which ramps up anti-inflammatory cells. The other component is CTLA-4, which is what Dr. Reddy's manufactures. So Dr. Reddy's makes one of the components of the drugs, which is why Reddy's was a natural partner for Koya Therapeutics. I will say that the reason we believe that this drug
now
is
at
going to make a
350.
meaningful difference is that it targets multiple pathways, inflammatory pathways, and ALS is such an disease driven by a complex pathophysiology, and unless you target this complex inflammatory environment and pathophysiology, it's hard to treat this condition.
What
So
the
that's
hell are you
why
talking about?
putting synergistic agents together, which is what Koya 302 is doing, we think it's going to make a meaningful difference. And we've seen some very exciting clinical data to date.
I don't believe
Tell us
you.
about the data. What's the latest?
We've run an early study in a cohort of patients who were declining prior to treatment, and remarkably, the patients very quickly stopped that decline. There was a cessation of progression, and that continued out into 6 months, and there was a meaningful difference even out to 1 year, which is typically you don't see that in ALS because of an incessant decline month after month. And so what we're trying to do now, and what we are going to do, is to run a randomized double-blind trial, which is going to compare the active arm, which is Koya 302, to placebo. And we're very fortunate to work with Dr. Reddy's in this trial.
Tell us about the trial process, Mark, and generally, what is that process in dealing with the disease that so far hasn't found a lot of successful treatments? How do you know what steps to take? How do you know how to run the trials? Is this going to be something that is breakthrough in terms of the process? So what do we know about kind of testing and analyzing the results around ALS?
So there is a standardized score that we use to measure the progression of the disease of ALS. And with the combination of our clinical expertise as well as Koya's clinical expertise, we have combined our resources to create the most efficient mechanism to demonstrate a significant difference between the placebo and the Koya 302 product. And the goal is that with a modest clinical trial that we hope to start in the second quarter of this year,
AMD
we'll be
strong
able to
today.
show a statistically significant difference here, and hopefully the next 12 to 18 months after we start those clinical trials.
Okay. So the timeline here is still fairly early on in the going. Is that a fair way to describe it, Mark?
Yes, again, we saw the data. We had met with Koya several months ago, and we looked at the data, we analyzed it. We were very excited about the potential combination of our two drugs and our two corporations because Koya brings a lot of technical expertise. We bring a lot of the clinical and the commercial expertise. So that's why, again, we think this is a great combination. Koya will be driving most of the clinical effort, and we'll be there supporting with our product, but also with our other capabilities that we have.
Be careful.
The drug and the treatment, tell us about how it works, Howard, in terms of actual administering the drug and coming back to some of the science behind it. I think would be helpful as we try and kind of figure out how this disease begins and how to stop it. I mean, this is basically to stop it from progressing worse, right?
Right.
Yes. So this is a drug that is it's a simple to administer subcutaneous injection. You take it out of the fridge and you, just like an insulin injection, can inject underneath the skin. So it has a good product profile. But from a mechanistic standpoint, it's not just indicated, in our opinion, for ALS. It's for multiple conditions. It's for potentially for Parkinson's, for Alzheimer's, for frontotemporal dementia, and many other diseases that are driven by multiple components, one of them being a regulatory T cell dysfunction, Treg, we call it for short. That is a type of immune cell that is not working properly in ALS and these other neurodegenerative conditions. And unfortunately, there are other immune components that are also compromised. So this drug, this combination, works to suppress these multiple components. And by doing so, you're able to reduce the oxidative stress, the inflammation, and it prevents the neurons from dying and the axons from dying. And that is what we believe underlies these conditions and the decline that you see in these patients.
Okay. In terms of the rate, I mean, it's a fairly rare disease, but correct me if I'm wrong, it seems to be showing up more. Does that mean that you'll be able to find patients to proceed with the trials? And what has that reception been like in terms of
Go, baby.
the way patients are willing to take part in this? Either you guys, whoever would like to answer that.
Yeah, I can take that, Mark.
Perfect.
I can take that initially on the development side. We're confident that we'll be able to enroll and recruit because of the huge unmet need and the dramatic interest of patients and patient advocacy groups and physicians. We're in touch with some of the top thought leaders around the country. We're planning this in North America, both in the United States and Canada, and we're really far along in that process with our CRO. We're confident we'll enroll, and we'll enroll quickly and efficiently. And of course, we're working with Dr. Reddy's to make this a seamless process.
Okay, Mark, if you wanted to elaborate, then also kind of tell us, it might be further down the road to think about commercialization, but how much visibility you have on that front?
So, Oliver, just to give you a quick statistic, is there's roughly 30,000 patients a year in the United States that have ALS, and about 5,000 new patients are identified each year. Unfortunately, because this is such a
the trial.
Welcome back to Squawk on the Street. I'm Bertha Coombs with your CNBC News Update. Defense Secretary Lloyd Austin is appearing before members of the House Armed Services Committee this morning to answer questions about his secretive hospitalization earlier this year and subsequent cancer diagnosis. The committee's chairman requested the testimony after launching an inquiry into the secretary's days-long delay in notifying the president and lawmakers. Russian President Vladimir Putin threatened the West with a nuclear response if NATO allies send troops to Ukraine. He made the comment today at the beginning of his annual State of the Nation address. His comments coming after France's president suggested sending troops in the future rather than just funding and arming the country indirectly. And a Russian court rejected an appeal by Russian-American dual citizen to lift her detention on a treason charge and let her go under house arrest. Authorities arrested Los Angeles resident Ksenia Karolina last month and accused her of trying to raise funds to support Ukraine. She is among several Americans currently being held in Russia. Back over to you, David, Sarah.
Thank you, Bertha. We'll take it, Bertha Coombs.
Traders adding to bets on a June Federal Reserve rate cut after the Fed's preferred inflation gauge saw its lowest year-over-year increase in nearly 3 years. Doesn't tell the whole story, though. Former Fed Governor Randy Kroszner, now professor of economics at the University of Chicago's Booth School of Business, joins us now. So the year-over-year number went down. That's good to see. Though the monthly rate, which we highlighted earlier, especially on core, up 0.4% and a 0.6% rise in
Be a little
services.
careful.
How worrisome is that going to be for the Fed?
It's exactly what they are concerned about and why they're not rushing to cut rates. Certainly, we've seen the inflation come down from its peak quite rapidly, but to continue to move down is going to be tough, particularly because wages are not moving down nearly as rapidly. They'd been around 4% when inflation was much higher. They continue to be around 4%. And that's one of the largest costs that firms face.
Correct.
Particularly firms focusing on services rather than manufacturing. So it's going to be a slow decline. The Fed's not going to move too quickly. June is possible, but this is one of the reasons why they want to see more data to see whether the wages start to come down, whether they start to see services prices come down.
What is your sense, we were talking about earlier, about just what's happening in January?
Puts are looking
there
real
appears to
good.
be some sort of acceleration, not just in prices, in parts of spending.
AMD double topping new high.
Numbers turning up, and some of the other weaker parts of the economy. Do you think January is unique, or is it telling us something about the rest of the year?
It's always hard to tell from one
Good
number
question,
whether
Sarah.
it is unique or something on a trend, and so that's why the Fed is going to wait to see. I think you can't overinterpret any one number, but you can come up with a number of factors that come in. We're seeing a little bit more weakness in some areas of spending, but we also saw a very generous increase in Social Security payments. So I think that's going to have to work out over the next few months. But I think this is precisely why the Fed ain't moving. Well, obviously they're not moving now. I think it's unlikely that they'll move in May. If things continue to move down, and if we see more signs of labor market weakness, they're then likely to move in June. But I wouldn't even say June is baked into the cake.
So what's your guess right now? 3 cuts this year? Do you think they'll be able to do that?
I think broadly that seems reasonable based on their forecast and based on the way the economy is likely to evolve. But we've been in a really fortunate situation of having this very soft landing. I'm still a little skeptical that we can get there with no pain. And if there's a little bit of pain, then the Fed's going to have to move a little bit more.
You mean economic pain? You mean labor market?
Yes. Yeah, exactly. I think
It hasn't really materialized yet.
Not at all. I think one of the reasons for that is that even though the Fed raised interest rates really rapidly, still inflation was quite high, moved up even more rapidly, and wage rates moved up very rapidly. So you started to see them move up, not quite as much as inflation. Now inflation has come down. Interest rates, real interest rates, inflation-adjusted interest rates are now positive and have been so for about 6 months. Real wage growth rates are now positive. They've only been positive for about 6 months or so. I think firms are going to be less sanguine about hiring now that they have to pay a positive real wage. I mean, it's great for households, not as exciting for firms to be hiring. And real interest rates have become positive really for the first time in a decade or so. I think that is going to be kind of a 1-2 punch, which will slow the economy down. Probably not necessarily leading to recession, but I think we're not going to see kind of the gangbuster growth that we've been seeing over the last few months.
All right, Randy, that's a prediction. Appreciate you joining us with some insight on today's big numbers. Randy Kroszner, former Fed governor. AI and tech names, a key part of the broader rally, but is healthcare where you should be putting your money to work right now? Look at Eli Lilly, up more than 140% over the last year. Novo Nordisk up nearly 70%. More on those stocks to watch right after the break.
AMD new high. Come on, SPX. Should be making a decision here shortly. Right now it's 10:40 Eastern Time. Sarah looks like she's dressed in a potato sack. A potato sack cost me over $1,200, honey. AI, nice chart. Correct. Jimmy looked. AMD, yay.
Mega hit GLP-1 drugs such as Ozempic and Mounjaro have completely changed the way society approaches weight loss. And with an estimated 5 million people already on these medicines, potentially for life, there's still plenty we have yet to learn about the long-term effects. CNBC's Melissa Lee takes a closer look. It's in our new documentary, Big Shot, the Ozempic Revolution.
In 2018, Novo launched the diabetes drug many started using off-label to slim down, Ozempic, followed by Rybelsus, a daily pill, and then Wegovy to treat obesity, all made with semaglutide. Rival Lilly countered with a 1-2 punch.
Lilly.
Chart. How we look, Rick, up here?
Kind of what is here punctuated by earnings. You can see we had long period of just sideways movement here, and once we use our volume profile, we can see that was actually the point of control. The area of heaviest trading, that comes in near 203. So like I said, very bottom heavy volume profile here. Then we had earnings, and we're up about like 30-some% from that point here. We had a gap down, but quickly filled the gap, moved upward in a rising wedge type shape here. Two trend lines converging toward each other, the steeper one on the bottom, the more shallow one on the top. We did get the downside breakout from this as well. Didn't have a huge reaction, but we did push after a fake out to the upside that resulted in our 52-week highs. We gave back those gains and fell below our 21-day EMA, forming a double bottom here near 249. That was the low here and the low here. Since then, we've recovered a bit. We are above our 21-day EMA once again. We've got this volume node that's forming near like 257 or so. Another one that formed here near 240 is another key point to be watching just in case things fall to the downside here. RSI trending upward since earnings, but some variation in the movement that we've seen here. The dips below the 50 midline were typically pretty short-lived, more tilted toward the bullish side right now. We're above all our moving averages. They're all trending upward, but look at our 21-day EMA. Getting very shallow in its slope, almost sideways here, so the trend is in a bit of jeopardy. Once again, looking at our standard deviation channels here, we can see +1 channel comes in near 261, +2 channel comes in near 280 if we were to get some big outsized move here. To the downside, our double bottom near 249 is a key point to watch for further downside.
It seems like a decent range kind of established here for Autodesk after a couple big breaks higher. Sitting pretty comfortable above that 250 range. All right, last one. NetApp, Jenny. What do we got?
So NetApp, the story with NetApp here is really going to be all of the recent industry projections we've gotten related specifically to storage spend. So storage spend is huge for this company. I was reading this really interesting article from Tech Target that highlighted there's been this major revival in demand for storage in recent months, citing data that showed that overall data storage has gone up for 4 straight months, running from September through October of 2023. This company did also disclose at the Raymond James conference in December that AI will be a major growth driver for the company, and emphasize they've already had a program growing their AI business for about 5 years. So that's big to be in AI, and also big, we know from looking at some of these storage companies, that's also a very, very hot point right now in the overall tech world, and helps that NetApp right now is currently trading at around 12 months normalized PE value of around 13.7 times. That's below its 15-year historical average quite considerably of around 15.2 times. So right now slightly undervalued, which is typically a good thing into earnings. You never want to be at peak valuation, and then you have to put out basically perfect numbers.
Yeah, the stock's kind of been grinding sideways here, so trading in a range, Rick, as well to some degree?
Probably our worst chart in the short term today here, but once again, this kind of similar shape. Steep move upward, sideways consolidation, steep move upward, sideways consolidation. It happens over and over again. You see it all the time, and this is a pretty good example of it. Triangular shape in the short term. We are above all 3 of our moving averages, though. We're still pretty close to our 52-week highs, working our way above this volume node near 89 or so. And we can see RSI not doing too much, just kind of following the price action, bouncing around the 50-week line, but more geared toward the upside because we are above that line here. Now, if we focus once again on our standard deviation channels, we see an interesting thing. Price hit a ceiling at the linear regression line today, our line of best fit, our idea of fair value for the stock here. If we do move to the upside, the old highs, the old high close, 91.39, that's the mark to beat. Then 98.47 is where our +1 channel comes in. To the downside, kind of an interesting, potentially precarious situation. If we break below our lows from our triangle near 83, there's not really much to stop us until we get to this area here. And that's the space between our highs and our pre-gap highs that we established here, here, and here. So between 78 to 80, that could be a support zone to watch.
Yeah, a lot of trading down there and quite a huge gap. So I think it's the most interesting chart out of all of them, frankly. So maybe some volatility for NetApp here. Thanks, Rick, for the charts. Jenny on the numbers. Good stuff. When we come back, let's trade in a different language, whichever you want. We're going to talk about Duolingo with the big pop, up 20%.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially,
turbulence. Talking turbulence. We got a snake set up. Wedge. PANW. 1, 2, 3. Wedge. Boom, baby. Setting up. It's warm up. Whoa. Wedge. Man, this thing's acting freaking wicked. I don't like it. You can get the 1 2 bits and a freebie. God. What if they did the upgrade this weekend? A little bit touchy. Real touchy. Okay. Got a Darvis box with a 1 2 3B out of a wedge. It'd be a risky trade. Let's see how expensive they are. God, I can't believe I got them up there. March 15, March 8th. .320 strike. At 515. She's going to hold this support or knife. Boom, there she goes. Well, there goes that idea. So far, in a way. Maybe it's giving me a better opportunity. Is that just at $3? Oh, that's the other one. 5. Lily's down 7. Let's talk about the SPX.
You know, at the end of last year, probably in the middle of December, and yet the index continues to print new highs from a spot basis each week, yet the momentum has failed to register a new high and is actually starting to decrease. And this isn't always, you know, a sign that price is going to take a U-turn and go to the downside, but it often can precede at least consolidation events, and sometimes it will lead to, you know, downward pressure. And I think consolidation feels more likely, just given that we're kind of coming out of earnings season. You know, we don't have that idiosyncratic, you know, moves happening and really pushing the index higher anymore with the Mag 7. And now, heading into the really key, macro events next week with the labor report and then the CPI report on the 12th, consolidation could be likely here.
Boy, the market, I thought that was going to be the story this week, but we're just taking every piece of data in stride, Alex. It seems
consolidation.
Like if you're a bond bear, if you're a stock bear, the only thing that you've got is the only hope you've got is scorching hot inflation numbers, because this morning's was obviously not ideal for the Fed, but we don't care.
Yeah, I don't know. I think it just depends on the lens and being aware of where the market's at. After CPI and after PPI, expectations shifted. There was a lot more, focus on PCE. We already basically had the formula. That's why it was in line. Now, with the downwards revision to December,
we got the
I think that
PCE.
took a lot of the heat off the higher expectation. The market was caught a little off sides, kind of selling into the report with a little bit more bracing for impact, and then
make sure you set stop losses
intraday. Combining this to kind of what Mike's talking about, looking at it holistically, sort of with the
we
trend
can come
in the
down and
market,
hit the 200.
different buying opportunities, and we saw a much higher low if this move holds. The question is, at least for the S&Ps and the NASDAQ, can we set a new high? And does that new high beget new highs? And so things look still strong. I don't know that this is a market, and you can see
Kid, you talk too much.
is one that you're chasing higher. Maybe you're looking for these ease-back consolidation moments to add risk, and maybe you're easing out of some of those positions in the higher ends of these range, especially if we fail to break out. You see the NASDAQ particularly struggling at a level that it just lost momentum at, in the last week a couple times. Now, where this is different is in two places. And so this momentum that is for the S&P 500, well, I think it's gone to the Russell 2000, and I think it's gone to Bitcoin. And so you got to be aware of that too. And if you look at the Russell 2000, it looks way more powerful in this rally, higher low, higher high. And it also is nowhere near its all-time high, maybe a little breathing room as well.
That's the one I'm really focused on here. As we've kind of drifted post-NVIDIA for the big indexes, the Russell is the laggard. Can we get through 21? That's the level, right, Mike? I mean, not rocket science on the chart, right? 2100 for the Russell. We get through there. It's technically breaking out.
I would say you are correct by saying that. I do think the path to getting there is more difficult, because for the Russell to really break out above that level, I do think that you probably need one of two scenarios. And I think the second scenario is probably a catch-22. So the first
you got
one
the
is
early high.
that the equity markets in general, they all just take off to the races from here. Whether that's because the Fed, gets some friendly inflation numbers
Nice
over the next
comeback.
couple months, the cuts that many are anticipating do happen, and the Fed, doesn't get hawkish in any sense, because let's say growth goes above what they're expecting from a trend perspective. That's a possibility. I don't think that's the likelihood. Second is if you get a large mean reversion and the S&P goes down, Russell goes up. Eventually, that weakness in the S&P is going to weigh on the Russell. So I think the Russell is kind of a Sisyphus type situation where it's a boulder pushing up a hill. So that's kind of how I see it.
You got higher lows.
Hey, this day may not be over yet. The dollar's almost back to even.
Ascending triangle.
So we'll see what happens. All right, thanks, guys. That was copy.
On the SPX.
That's it for Morning Trade Live. Thank you for joining. I hope you enjoyed it. Trading 360 with Diane King Hall coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our...
Sorry. No trickery. Mm-hmm. Hmm. Damn, man. It's IWM. One more squeeze on IWM, maybe.
all lingo to me.
Right, that's right. And I mean, look, they announced some plans to cut costs, some layoff plans, so certainly seeing it get a bit. I do find it hilarious when you see the footage that we just showed about people shoving the TVs in their cars. I remember around Black Friday seeing someone try to get one of those massive TVs into, I don't know, let's call it, it was a car smaller than a Honda Civic. They did not successfully do it.
That was me probably, because I have done that exact scenario.
That's all right. That's all right. All right. Best Buy shares up more than 4% after their latest quarterly report card. Jenny Horn, thank you. All right, let's get some insights on the news that's shaping the market. And for that, we want to welcome in Peter Tuchman, Senior Equity Floor Trader, Trade Moss, also known as the Einstein of Wall Street. Peter, you know I always love chatting with you, whether it's on or off air.
Yes.
So talk to us this big picture about today's market and the reaction. We had this new PCE data. The market's been waiting all week for that.
Yeah.
Take us through the reaction.
We kind of feel, look, we came in, the numbers came out as expected. And look, markets are really wrapped up in expectations, right? We saw that CPI and PPI number that came out a week ago, and that did not support the expectations, right? We were looking for it to break 3%, and it came in at 3.1. As small as that 10% was, the expectations around seeing a 2 in front of that number made the market sell off huge that day. If you'll remember, at one point we were almost down 1,000 points, and the S&P was down over 100. We did see by the end of the day, when markets do that in reaction to economic data, if we close the day on the low, we usually gap down the next day and there's a follow through on the sell side. That did not happen on that day. What ended up happening was in the last 5 minutes of trading, the market turned around and rallied back 30 handles on the S&P 500, and those days following it were more positive than negative. So this number, it feels like a muted response. We did open up 20 handles. You know, I don't know what the market was looking for. Did they figure they were either going to blow them out of the water or they were going to disappoint? The market, it felt to me like the market was waiting for disappointment because the last two economic bits of data were disappointing, and that they were going to sell it. There's a big short position on, I think, you know, in the market. There's a lot of sentiment that we've come too far, too fast, too high, and that the market is due for a pullback. We're not seeing it.
To this level, you brought your hat.
I brought my hat. We've got the S&P 5000
hat. Yes.
I'm the guy with the hats. Everybody knows me for that. Obviously, we are not pulling out any Dow 40,000 hats yet because we don't want to put the Kavorka on the market. But we have closed above 5,000 in the S&P. That is a milestone. It is a landmark. It is significant. That is a big number. It's never been hit before. And basically, we got to 5,000. We've been trading above it significantly. So look, is that a function of just the Magnificent Seven? Is there more breadth to the rally? The Russell has seen a nice rally recently, which shows that there's breadth to the rally. You know, look, the market is sort of treading water right here.
Is there any indicator or trend that you're looking for or investors should be paying attention to?
You know what? I think right now it's sort of hurry up and wait. I think we've had an extraordinary 2024. Think about it. Today's the last day of the month. We are 8 weeks into this year, and we have had a major bullish rally, right? And so where do we go from here? What is the next thing to be the catalyst to take the market up or down?
Let me flip that back to you.
Okay.
That's literally what was in my head. What is the next thing? What's in March that's going to be the catalyst?
Look, you know what? Everybody thought that today's number was going to be the catalyst, and it's a muted response. We opened up, we're trading down, it's kind of muted, it's quiet. You know, there will be a lot of activity. Let's note today is the end of the month. That's significant. We have an MSCI global rebalance today. You're going to see major volume on the close. That is a big rebalance for us. It's kind of one of the Super Bowl days of the year when the MSCI is rebalanced. There are a couple of other names that have some big movement, a couple of mergers that are closing today as well. Peak and Doc and a number of other names. I don't know what the future really brings at this point. We're sort of at that precipice where we're either going, this will be a base and we're going to forge a lot higher. What is it that's going to take us there? Or are we going to fulfill that prophecy that so many of these doomsdayers have been saying for a while? And I would imagine they're in a bit of pain that this market is due for a sell-off, and we're not seeing it, right? It's possible. Any small thing can make that happen. I just don't know what that catalyst is.
So when you think about then the potential for volatility, especially like say on a day like this, especially the end of the day, how should investors kind of prepare for that?
Look, at the end of it, look, what's good about the end of each month is that we do have the beginning. It is followed by the beginning of a new month. Often that is a new influx of money into the market. We will often see in the first few days of a month, people are putting money into the market. Look, there's so many different tranches of people who have been sitting on the sidelines waiting for the market to come in. It's not coming in, and eventually they just kind of just throw in the towel and say, okay, I'm going to buy the market, right? I mean, if you've been waiting for a sell-off, you know, you saw one in July, you know, you were waiting anxiously for one in October, November. That didn't happen. You figure maybe it'll be profit taking at the end of the year. That didn't happen. Maybe in the beginning of the year. That didn't happen either. So I don't know what to say. I don't know is a legitimate answer when you're discussing a market that's trading so frothy and so high. I'm okay with saying I'm not sure. I don't know.
Even from Einstein, Peter Tuchman.
You know, look, I know I look like him. I'm not that smart.
Thank you, Peter Tuchman.
Always a pleasure.
Always fantastic to have you. That was Peter Tuchman, Senior Equity Trader at Trade Moss. Thank you, Peter. All right, plenty more to come on Trading 360. Next up, it's the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes through the technicals, and Alan Nuckman of BullseyeOption.com takes us through the trades for
Lichtenstein.
CBS and Marathon Oil. That's next on Trading 360. Stay with us here on Schwab Network.
Do, 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 do.
My dad was a hard worker.
Oh God,
he used to do
dad.
side jobs, installing windows, charging something.
Your dad. I asked him to do me a favor one time. I said, Johnny, would you please put air in my tires? It was your dad. He said, yeah, I'd do that. So he runs down to the gas station and he says, I put air in your tires, and I said, well, how much air did you put in it? And he said, 52 pounds. I said, what? Man, them things can only hold 36. Oh. I'll fix that.
Moves. The Watch List with me, Nicole Petalides, 2 p.m. Eastern on Schwab Network. A fresh take on the hottest trends in the market. From every click.
Google is pulled back to the 50 on the 1 minute, on the 5 minute. Google, I'm watching it closely. SPX, trying my patience. I could have really profited off this trade here, but I didn't take the clue. $2 could have got it at. We're at 255, so I'd probably bought 5 of them. I'm at 260. That's 300. So I'd have took that. They're at 195 too, Jim. Did you see that? Yeah, 190 even. Okay. I guess my girl's not on here.
The market following the PCE number that we got this morning, it was in line, especially when you think about core PCE, but still a little higher than what the Fed would like to see. What's your take?
Yeah.
Well, our only concern is that the economy is so strong that they can't cut rates sooner as opposed to later. Looking at the futures markets, they're telling us we're gonna get something probably. We keep shifting it back to June or July now, but the rates are coming. We're gonna stop raising rates, obviously, and I think the market's gotten comfortable with that, and that's why we've had the rally to all-time highs. It's not just us; It's Japan. It's the Stock 600. It's the Nasdaq. It's the S&P. It's the Dow. The only major market that hasn't made new highs yet is the small caps, the Russell 2000. But we'll wait to see. And if it does, that'll be a nice confirmation. You're seeing a lot of other stocks catch up, and that's what I wanted to see.
All right, a lot of stuff catching up. That's what you want to see. All right, let's take us through some individual names. Alan, first up, let's talk about your first trade. You've got Anglo Gold on your radar.
In the same vein, talking about the fact that I don't think we're going to raise rates anytime soon. At some point, we're going to be cutting rates. That should not allow the dollar to get stronger. And if the dollar doesn't get stronger, then gold can benefit. You can see what happened in some other markets that are unrelated to gold, but they sometimes get looked at the same time. I'm not going to name names, but you can see gold's setting itself up and get above 2075 for the actual physical gold, then we can get a run back to those highs. Now, looking at this mining stock is trading for about, what are we looking at here, 1850 or so. It's 50% off its 2020 high. What I'm seeing is some leverage buying in it. We had an October low, but the theme for today is summer in February. I'm looking at June options as my vehicle. I see this stock is trading sideways between 15 and 20 for 6 months. A breakout of the range target is 25. We're right here at the 200-day moving average, so we should see a pop to the top of the range. A June 15 call, which is the bottom, is trading for about 4.25. It's it's going to be now $3.50 in the money, so our expiration break even is only 75 cents above.
All right, Ben, I want to bring you into this, and let's take a look at this chart. What can you tell us about this chart that you're taking a look at, Ben?
Yeah, well, Alan mentioned, Diane, 15 to 20. It has been stuck. It's been very much range bound. It's tested that 19-20 level a couple times, and I think that as we inch our way back up to it, I'm going to take the opposite side of this, and I think we could be setting up for a potential sell opportunity here. You'll see why when I show you what's going on with that longer-term trend to the downside. But let's just dive into the most recent price activity. Here it is, very much range-bound, right? On the left side of your screen, the highs that we saw in the beginning of February. Down here, the lows down around 1650. So I just kind of evened it out, 16 to 19, and we've got 1750 as a bit of a pivot point. This is going to be key. In a minute, I'll show you why. But here you can see we're holding above that right now, but still struggling to take out that key resistance up around 1920. So when in doubt, zoom out. This chart, there's not a lot of information here. And even more so, I noticed, look at this, earnings provided a bit of a catalyst, but we were unable to take out that range that had already been established this month. So again, let's just step back here. You can see as we pull up now a 4-hour candle chart, a very well-defined trend to the downside. This is going all the way back to the beginning of May, end of April last year. Stock was trading up around 30. And Diane, look on the way down. You can see these areas where
using
it just
the
kind of
5 minute
pauses
again,
and regains composure, goes sideways, and then breaks out to the downside again. Look what's going on here. Basically, since August of last year, I said that 1750 level was significant.
It's a pivot point trader. That's what it is.
February, but here you can see this goes all the way back to last summer.
Every one of them are
and
a
then
pivot
again,
point.
I mentioned the upper extreme, this 19, this 20 level. We've tested a few times, to kind of right back in that range. That's why I feel like when you reach that upper extreme of this range in a trend environment to the downside, that's where you find that sell opportunity.
I love your haircut.
Over, take out 1750, open up a door for a retest of these lows that we saw back in last fall here. So for me, it's on a trend to the downside. Alan did mention the
I do see a flag at the end there, buddy.
Here, look, I find
Breakout.
that an area of resistance, if anything, right now. We still have yet to take that out. So RSI is not really participating to the upside to the extent the bulls would like to see. I think we're still in a downtrend here, just testing an upper extreme, Diane.
Ooh.
All right, Alan, I got to give you the final word.
Well, I like to position for success, and markets that trade sideways, the longer they trade sideways, the more significant the breakout is. So I'm positioning for a bullish breakout here. I've got an in-the-money option. I've got 3 months of time. And a confirmation will be when it does push above that 20. And the best part is these options will produce significant gains from just a modest move in the underlying stock.
All right, Alan, let's move on to your next trade, CVS Health. The stock is under some pressure today. It does have an average moderate buy rating. Let's talk about your trade there, Alan.
Well, also trading sideways between 65 and 85 for a year. We're right now at the midpoint at 75. So we're about 30% off the 2022 top. What I'm seeing here is some leverage buying, some accumulation. I'm seeing money flow into options on this stock. Now, that's smart money because somebody has a very strong opinion, they're going to benefit the most by using options and being right with that. So the PE on the stock is 11. So it's a discounted stock compared to the rest of the market. I'm looking at a June option, a June 70 call, trading about 675. Again, it's deep in the money. We're trading the stock's at about 75. So it's, $5 in the money with some time for development here. And a move to the top of the range, a break out of that range targets, 105. But right now, I'm just looking for it to get back up to the top of the range.
And Ben, what are you looking at in the chart for CVS?
Well, I was looking at that range as well that Alan identified here. I actually narrowed it down a little bit, 78 to 70 with a midpoint around 74. And we're right at that midpoint. We're struggling at the upper extreme. This is a very similar example here in terms of price activity and some of the structure we're seeing as AU, as the last example we looked at. Let's get into what's going on here and join me as we take a look at CVS here. And first and foremost, just again, similar look. Identify the price activity we've seen since the beginning of February. We've got a low established around 70, an upper extreme around 78. Similar situation. Earnings didn't really break us out of this range. And in fact, look where we are. Smack dab in the middle here right now, hanging around 74. Again, lower extreme, upper extreme, not a lot of conviction. When in doubt, zoom out, and this is where you'll get a little clarity. Taking a look here now at a 4-hour candle chart, similar time frame in terms of what we just looked at, going back to the beginning of last year, actually. So you can see the stock was trading up around 104. CVS broke down, went sideways around 88, and then again, break down into last spring, where we've been sideways since, kind of hovering around 74. Now, this is what Alan was talking about, the upper extreme. What do you say, 80? 65 and 55, I think he was said on this one. But either way right now, again, you can see this range-bound type price activity that's been playing out. But still bearish pattern. Bears looking to sell the upper extreme, tests that fail. If you get a breakdown through 74, you open up a door for a retest of 64. Let's take one more step back. I got another chart to show you where we are pinched in between the 50 and the 200-day moving average. Look at this 200 just flatlining, and unfortunately for the bulls, the RSI is starting to roll over here, which signals, again, that we're starting to see some weakness here, potentially breaking down. Again, take out 74, you open up a door for retest those lows that we saw last fall.
All right, let's take a look at your final trade for Alan. That will be MRO. That's Marathon Oil. It's flat, pretty flat today. Yesterday it was weaker kind of compared to its competitors. Take us through this last trade, Alan.
Again, it's a stock that's discounted from the overall market. It's down 25% from its 2022 top. I'm seeing the leverage buying. It's got the PE of 9. It's been trading sideways between 22.5 and 27.5 for a year. So the midpoint of that's 25 is about where we stand right now. I'm looking at a 22 call for June, 3 months of time. The 22 call is trading for about 3 1/4, and the break even's of $1 higher on the option. So it's as much the strategy as it is the stock. I love the way that the oil market is setting itself up right now. We could see a crude breakout above 80, and that market's been long forgotten about, with the stock market continuing to make new all-time highs. So I think there's better risk reward in something like a gold or an oil, like we've talked about 2 out of my 3 stocks today. So that's what I'm looking at for this. This has a very positive chart, and the PE on this stock is 9.
All right, and Ben, take us through the technicals you're watching.
Well, I'd agree with Alan on this one, a positive chart if you're looking at the short term. Once you step back a bit here, I'm going to argue again, similar to the other 2 names, that this one might just be stacking up for a longer term sell opportunity in a trend environment to the downside. Let's begin.
Let's begin.
With, look at some of the price activity we've seen into recent highs, going back to just the past few weeks. We traded up to 24. We were
trade's going to come to me here soon.
23. So not a significant move to the upside, but nonetheless, in this instance, was able to
MRO. I used to trade that one.
A couple areas of balance that have formed at higher and higher levels. I think in many ways most notable on this chart, you can see a bit of a double bottom that formed again just below, or right around that 2250, just below 2260 level.
Yeah.
Look at this here. Every 50 cents increments, we see new areas of value forming at higher levels. It's not uncommon to see that in very predictable
CVS,
so a bullish pattern here, Diane, on this hourly candle chart here. Now, let's take a step back here, because again, you can see much like the other 2 examples we looked at, when we add a little time on a 4-hour candle chart going back to the fall of last year, migration of value to the downside. Interestingly enough, in this instance, we're talking at $2 increment levels. The market has just stalled out here more recently into, it looks like this 23 range, retesting 24.50, possibly stalling out here. Are we rolling back over? If so, take out 23 and you open up a door for a retest of that lower extreme. This is just because within this range, when the market's kind of random, establishing area of value, it's just overlapping horizontal and rotational. So you work your way to the upper extreme, you fail, you come back down, test the lower extreme, but we are in a trend lower, so we're giving the benefit of the doubt to the
You see the higher lows though, sir.
Favoring short-sided trades here if you want to participate in the trend. Let's step back. Similar as the other two names we looked at, kind of pinched here between the 50 to 200, not really providing a lot of enthusiasm, but the RSI is signaling that short-term bullishness that we identified. It's just within this longer-term weakness, this longer-term trend to the downside. So the way I see it, very similar to the other two examples. Yeah,
SPX not doing too
up
well.
here and inching its way higher, but it looks to me like providing opportunity to participate in that long-term short-side trend that's playing out.
All right, Ben, I'm going to yield the floor back to Alan. Final thoughts, Alan.
Well, being a bull, I'm always looking for buys. I'm looking for buys and a breakout. And if we go on, we're looking at the Wayback Machine a couple weeks ago, we did AI.
Yeah, we
AI
did.
is a stock that traded sideways. So if you want to pull up that chart, Ben, real quick, that's an example of something you and I both agree. The longer something trades sideways, the more significant the breakout is on the upside. And that's what we've seen today where the stocks jumped 20% when the chart didn't look great, but we use I use in the money options to be in position, so when a chart does have that performance, then you can benefit.
Badass.
Bigly. What a word. All right, we'll have to put a pin in our conversation there. We found more agreement than disagreement. Alan Nuckman, Chief Market Strategist.
She liked what I said.
Option.com, and Ben Lichtenstein, host of Futures here on Schwab Network. Thank you both. Coming up next, we're going to spotlight earnings from Salesforce and Snowflake. Caleb Silver joins me next to break down both of those reports. That's coming up here on Trading 360.
She thought I was funny. Can only take so much of you. Oh no. Rick Stone, that's who I was thinking of. You do look like Rick Stone. Guaranteed that's who it is. So they can drop all lower than the 200. That's what I think about loading up here. We just fell through support. So be careful. If you're going to take a risk, this would be a spot. But if you're bearish, I'm going to scalp it. Jimmy's going to scalp it. The 5100 strike at 120. $120, $125. We have to stay above this. 506.97. Hey, there he is. My favorite chartist. SPY, scalping material. I mean, it's, yeah. Oh shit, I'm looking at the SPX. Do that. What have I done? Whoa, whoa, whoa. I gotta get above the 200. Where's that? Ooh. That's not what I wanted. $507,877. So we're going to stay above. Hello, is anybody here? Monster Beverage, MNST.
Monster Beverage in general in the sector, best in the sector. Kevin Green, senior markets correspondent. We want to switch gears now, though, to spotlight some earnings from Salesforce and Snowflake. For that, we want to welcome in Caleb Silver, the editor-in-chief of Investopedia. Caleb, always appreciate every chance I get to talk with you. You and I go way back. Way back. But let's dive into the results that we're seeing today. We have Salesforce in focus. We'll talk about that first before we get to Snowflake. Salesforce was a beat, but then there was some guidance that was soft. What's your take?
Yeah, the guidance was a little bit soft for the fiscal year 25. Company projecting around $37 to $38 billion in revenue this year. Pretty good year. Analysts had that a little bit higher. Nothing crazy, though, on the miss. Stock trading lower after hours and then bouncing back in the conference call with Mark Benioff and investors. But I don't think it was because of a redirect in the forecast. Mark Benioff took about 30 minutes to lambaste the AI industry, talking about stolen data, talking about how customers and potential customers are using bad AI data to make their decisions. By the time that call was over, Diane, stock up 1%, up 2% today. So I think investors and analysts had to get used to the fact
New low.
revenue was a little bit softer.
SPX.
The professional services revenue decline of around 9%. That's a little bit concerning because that's sort of at the core of the revenue picture.
Yeah, and of course, obviously the topic of AI is going to come up in a company like Salesforce and companies within that space.
Scalping the heck out of it.
How well positioned did it seem like Salesforce is in terms of the AI space?
The AI conversation is going to come up in every industry, from shampoo
The 5100
to customer
striking a buck.
relationship management. But the thing about Salesforce, and Benioff stressed this on the call, is that they're all about data. They have a ton of customer data, enterprise data, because that's their job. So the data is the gold mine for AI to do the work in. He calls AI sort of the picks and shovels of the industry, but you need data, you need trusty, reliable data. Salesforce thinks they have that. That's their corner, that's their block in the AI.
They can drop more.
They have the great data and then put the AI tools on top of that. They're going to be fine in this picture, but
They could drop all the way to 50, 65, another 10
talk
bucks.
About Snowflake getting hit hard today. The stock is down around 20%
Well,
at the
that's just
moment.
spot right in here.
But a lot of that has to do with
Right in
there was
there.
some talk obviously about outlook, but then there's a big
50,
Yeah.
60.
Change at the top.
Yeah, kind of a little bit of a change when your CEO of 12 years says he's stepping down effective immediately. It's going to raise some eyebrows and raise eyebrows. It did stock falling 20% in after hours, still down about that much today. This is Frank Slootman. This is just him saying I'm leaving immediately, but he's still going to be the chairman of the board. Let's see how long that lasts. The reason the company is citing for this change is because they're bringing in Sridhar Ramaswamy. He kind of led a lot of the AI stuff at Snowflake before. He's going to be the CEO. Frank Slootman saying that Sridhar is the person to lead the AI revolution at Snowflake.
Well, like I read in
Stock's
there.
down 20%. Remember, Diane, this was a $400 stock just a couple of years ago when cloud computing was everything. Now AI is everything.
AI is everything.
50,
And with the
68,
Snowflake
40.
move, does this come across as like a knee-jerk reaction, especially since, I mean, effective immediately does sound shocking, but he's staying on in the board. So does it seem like kind of that knee-jerk reaction that we sometimes see?
Yeah, but when you have a CEO that has that long a tenure with a company as successful as Snowflake has been, and then to say that on a earnings call and not sort of flag that to the investment community, that's going to raise some eyebrows no matter what's happening here. This could be the right strategic move for the company, but it's not one of those, this is going to be a 6-month transition as we teach Sridhar the ropes here. This is, I'm out, I'm in the boardroom, no longer running the company. If I was an investor, I would scratch my head on that too. But this stock
I would
has been
too.
suffering a lot since its highs in
It's like
2021.
Elon Musk all of a sudden, I'm no longer, I'm just on the board.
Also have lower projections, revenue projections and forecasts that also raised some eyebrows a little bit. And the company did lose $170 million in the fiscal fourth quarter.
Any final thoughts on either Snowflake or Salesforce?
Yeah, I mean, if you're looking for companies that were once
I'm gonna
hot
go
to
run and
get
get
that
some
heat back
coffee.
again, Salesforce is a well-positioned company. We're talking about $30-odd billion in revenue.
Today's a difficult day to be trading, so be careful. Is everybody careful? Don't overtrade. If you get a good one in, just sit back and smell the coffee. You overtrade, you'll lose it. We've been here before. Oh, there, look at there, right there. Okay, now. Oh, this is perfect. See? What'd I tell you? Come on, you idiot. Okay. Jimmy's freaking out on LSH. I'm going to move these up to the 5090s. Let's see what I'm doing here. 5 of them. Okay. Now this is what I called right here. So everybody be quiet. Don't say a word. Shh. We're looking at the 50s, 90. Now, how's your other ones looking? Your AMD. Oh my God, look at this. This is good. Come here. Okay. Should I start a position? Don't chase the market at this point, says Drew Petit. That was the other day. Okay, Jimmy's going to go ahead and make a challenge. These are the 59. Oh, 3 black crows. How can I tell? Okay, there's this 2 shoulder line. Perfect, perfect right there. Okay, get ready. For me. Jimmy's going to take a small risky chance. 135. The 59 is. Go, baby. Ha ha. Anybody running along with that? Get out if you got in it that cheap. Do you understand? Come on now. God, I hate you. Make business decision. I'm staying in. The sky is falling. How do you do it? It's not that easy. Come on, Jim. 155. Let's get to $2. Everybody wants to see it. Thinks best everybody's best interest that this thing goes ahead and breaks the 9 and runs back up and tries to find a tug of rope at 5078.77. Where you make a business decision now. Oh. 185. That's $50. Okay, now we are at resistance. Mike, what do you think? We're going to do it? 5068.4. You won't? Could make a business decision. Break it. I'm gonna go nuke my coffee and I'll be right back. Hope we break the 9. Uh-oh. I think we're heading there. We're heading north. Red Seas, my friend.
Hey, it's me, your skin. This acne craves a powerful cleanse. New CeraVe Acne Wash treats with...
We got a special guest.
Face the flag of stars and bars.
Break it.
Of red and
Oh, God. That ain't what I wanted to hear. Never mind. You just ruined it, John Wayne. Goodbye. Had to ruin everything. Now my things froze up. I had a little internet, having computer or internet issues. Now I have to shut everything down. SPX is at 210 per cheap. Yeah. 215. Yeah, we got a problem. How dare you? Okay. Might be back, YouTube.